Hmm. Okay. Remember, it's FOMC. Here, let me finish my breakfast. It's FOMC. FOMC today, 2 o'clock. Be careful. All right. Okay. All right. It's FOMC meeting today. Gotta be careful. I might be done by 12 o'clock. There's quite a few things that I need to be done. I need to get done today. Uh, so let's take a look at the profile chart. Profile chart. We're just kind of like in a. This is the overnight session. We're kind of like in a spinning top area right here. So that's what the candle's looking like. We got a wick on the top and a bottom. So that is just telling me indecision for right now. We haven't broken previous day highs or the previous day lows. The overnight highs is 28,178. Okay, so we have to be aware of the overnight highs if they start running it up. If we break 28,228, then which is previous day highs, then you have to be aware of that. So I would write down ONH for overnight highs 28,178. ONL for overnight lows is 27,640. Previous day highs is 28,228 and previous day lows is 27,603. Okay. So I would be aware of that. Now you can do PDH for previous day highs, 28,228, and PDL for previous day lows, 27,603. You got to be aware of those four. Okay. There's others to be aware of and things like that, but I would be aware of that. Okay. Let the market settle down for the first 5 minutes. Okay. Let the market settle. We could get some spikes. I would just let the market settle down and see where we're going to go. Let me go ahead and enable this. Wow, it's Wednesday. I still need to get version 1.5 out. Yeah, I'm just going to be streaming until noon. I can't be. There's a lot of stuff I need to get done. Also, I don't know how much I'm going to be able to be streaming here next week because it looks like I'm going to be starting a contract. Um,
Order filled. Order submitted. Order canceled.
okay.
Order canceled. Order canceled. Order filled.
Okay. That was a quick 265. I just went on ahead and took it. Okay. I know I tell everybody to sit on their hands the first 5 minutes. So you just got to be aware. Okay. I just wanted, this is a double stacked volume balance area. So if you actually try to get in here, you have to understand we just have a spinning top. So if you try to break this, we could be trying to make a run for it. Okay. There we go. Are they going to run this up? We have no idea. You got to be aware that there are some buyers and sellers as well. There are buyers and sellers in this area. Okay. Uh, what you could have done is you could have actually, uh, come on, come on. There we go. This was a buy. It was a below there. We had some pretty halfway decent volume up there. I was just looking for another push up, but we ran up and we had a little micro pullback right here. And you see that right there, that little doji candle had low volume. So when we broke that area, you could have tried to get in that area as well. Okay. We got a trap 90 single order. We got trapped 70 single order. A trapped 70 single order contract. So very interesting this morning. I'm at 265 so far. You can see right here. It's FOMC meeting day, folks. I would be very careful about what you're doing. Okay, I'm going to sit on my hands. Uh, I mean, we had this right here would have been pretty good to try to get a quick 10, 20 points on. Let's look at the stream settings. We're on ultra low latent. Yeah. So, yeah, I always tell people sit on the hands first 5 minutes, but if you are aware, the odds are really not in your favor. Okay. And you have to understand that the odds are really not in your favor. That that trade that I just took could have easily lost me like $200-300 very easily because I mean I took it in the first 2 minutes. So I always tell everybody to sit on their hands. Yes. But if you are comfortable with, okay, I'm going to go ahead and try this and understand that I could get a full stop out, or I could lose like $200-300 pretty easily, or even get uh, really smoked. So as long as you're comfortable with that, then yeah, you can try it. It's FOMC meeting day. I would be very leery about taking any positions after 12 o'clock, to be quite honest. We have 107 single order sell. So if you look at 5 minute, I mean, look at the 5 minute. We're already, it's 5 minute settings. 5 minute settings aggregated 200. So the 5 minute setting, we've already got quite a bit of sellers in here. So I think I'm just going to go ahead and relax, not do anything. I got a quick buffer up 265. Okay. If you take, if you try and take this sell, you need to understand it's 937. We can easily take that. That right there, yeah. This moving average on 1 minute is still sloping upwards. Okay, that 1 minute is still sloping upwards. You really need to be careful. This is FOMC meeting day. Okay, you get a rundown like this. You got that moving average on the 1 minute kind of sloping upwards. Okay, when you get a pullback like this, okay, this bar right here, you can get in right here. Look at the volume on that pullback. It's kind of like sloping downwards. So maybe you can try to get in here and maybe get out right here for about a quick 245. So if you do get in on a pullback and you're down here, you need to immediately move to a break even. When you see this doji candle, when you start not moving down more, but you're up right here, just go ahead and cut the trade. This is the kind of stuff you need to understand about scalping and getting your base hits. Base hits, 265. That's a base hit. Okay, that's just a base hit. I mean, 265 divided by 20 is 13 points. That's a base hit. Okay. No, it's not 20, 30, 40, 50 points, but who cares? That's just one contract. That's just one contract at 265. If it was four, it'd be over $500. Okay, that's good. But I'm not going to do that today. No way. Well, it was first 2 minutes. I wouldn't have done it anyways. Uh, Even if it was like a no news day whatsoever, I still wouldn't have done it. First 5 minutes, no. I always tell people to sit on their hands at least between 9:30 and 9:45. I mean, look where we're at. We ran up, and then we ran down. The first 50, you're not going to miss anything. A lot of new traders get FOMO. They're like, I'm going to miss out on the run. This thing's going to run 300 points. Uh, you know, I really don't think you're going to miss anything. And if you do miss a trade, there's always another one around the corner. So I really don't know which way they want to go. This is looking at the price action. We could be right, like stuck sideways. I mean, we could be stuck sideways. Look what this happens right here. Boom. And then we have a sell. You think you're going up, then you think you're going down, and and look where we're at. This is a very, I'll be honest. It might be a day just to not trade. FOMC days, not good. I mean, putting the odds in your favor, yeah. I mean, yesterday I wasn't trading yesterday, but I kind of looked at it a little bit. There were some decent trades. I mean, it wasn't a banger like a $2,000 day on Monday, but it was decent. Today, look what we're going to be getting. I mean, this is not. I'm not looking to really. Yeah, look at the 1 minute. 1 minute sloping downwards. Okay, so I really wouldn't be looking for longs. You're not trying to buy here and sell here and try to get this whole move. If you have a trading plan that does that, great. Can you get can I get part of that move? Yeah. I had my stop a little tight because, well, it was within the first 5 minutes. So, and look where we're doing. We go up, we go down, then we're just kind of sitting here sideways. So I kind of know, like, hey, this thing's going to reverse. I know it's going to go, and it did. Build myself a little buffer. That's all you gotta do. FOMC meeting days are just not really good days to be trading. Uh, you'll get the volatility around like 2:30. Especially around 2:30. Uh, when they're having their talk. Yeah, I mean you're right in the middle of a consolidation. This might be a decent one. You're right in the middle of a consolidation, though. It's really hard to take because look at the 5 minute. We're actually below this area right here. Okay, you're right here at the point of control. It's just very difficult to be taking stuff like that. As you can see, it's not. You're right in the middle of a consolidation. Look at that. Why not wait till it breaks up or down and then try to get a trade? I don't care if it runs 50 points. If you out of 50 points, if it runs, if you can get 10, great. See, now it looks like it's looking like it wants to break up. It was looking like it wants to break down. Now it's looking like it wants to break up. Here, let's take a look at financial juice right here. U.S. strikes will take place against Iran in response to attacks on U.S. targets in Jordan. Uh, yeah, so Trump wanted to talk. I mean, Iran wanted to talk. We're getting ready to make some movement. Look at the 1 minute. 1 minute's getting ready to move. Uh, we got the volume on the 5 minute right here. We're above the point of control. Let me look at the VWAP. Okay, we're kind of like the VWAP's kind of flatlining, but hey, it is what it is, folks. Yeah, I just don't like that action right there. That's some crazy stuff, man. Just don't like that action. FOMC meeting days are just not very good. A wick on the top, wick on the bottom, a wick on the top. Okay. Run up, run down. This is not. BWAP is flatlining. We got FOMC meeting today. So you got to be aware of all this crap. Like I said Monday, I would not trade an account that you got up pretty good. Okay. With me saying that, let's go look at account 27 because account 27 is like, okay, this one 975, this one 695. Okay, so maybe we want to trade account 27 because it's not a very good day. Why would I want to give back a lot of profits? Okay, if if I'm going to give back profits, let's say I get back $400 today on account 27. Okay, that's great. I'd rather do it on account 27 than on 28 or 30. Okay, so I'm just going to rotate to 27. The overnight lows, 27,640. 27,640 is the overnight lows. Be aware of that. Previous state lows is 27,603. Overnight lows is 27,640. We had a sell imbalance, but we closed above it. That is absorption. Okay. There's a little bit of absorption. you're forming a bearish engulfing candle on this previous 5 minute right there. You have some sellers all up in here. I mean, if anything, it probably would be a short day, a sell day for me, just because what I'm seeing here. Okay. This previous candle right here and also the current candle right here, this is a lot of negative delta in this area. So that don't mean they can't run it up. I'm just trying to be aware that we could just be stuck in an inside bar for today. We could be stuck into a short little inside bar. Boy, this 5 second chart is looking kind of ugly. Look at the 1 minute. We're just sitting there consolidating.
Order filled. Order submitted. Order submitted. Order canceled. Order filled.
I just get a quick one real quick. That was $150. Um, I just don't trust the market on a day like this. I just do not really trust the market, to be quite honest. Um, I had my stop a little tight, but hey, now be careful of triple dipping. Like I've always said, you can get yourself in trouble. Okay. Yes, I took this short, just made a quick 150. Okay, that's fine. We had a little rundown. We had a little micro pullback there. You see that green candle right there that came up to that sell imbalance? And the one thing you really need to look for when you're seeing stuff like this, when you're seeing a rundown and you see a pullback like this and you see this pullback in this green candle, you need to look at the volume. And as we break this area right here, you can keep going short. Like I said earlier, if I was looking to do anything, I'd be looking to short. Just from what I saw on the 5 minute. Okay, just from what I saw on the 5 minute, that's what I'd be looking to do. I'd be careful about really, I mean, because you've already had 1, 2, 3, 4, 5. That's the fifth signal. That I usually don't do that after like the third. If the third signal, yeah. The first and second ones are usually good. All right, what we have here for the news? As you see right here, As you see right here, we've got U.S. strikes will take place against Iran in response to attacks on U.S. targets in Jordan. So, but you have to understand at 10:30, crude oil inventories. At 1400 hours at 2 o'clock, we've got U.S. interest rate decision. U.S. interest rate decision. Okay, like I'd probably be out. Okay, definitely by that time. All right. You had 212 aggregated buy right here down at the bottom. Okay, right down there. Okay, and then we had this little signal right here. So we have this pullback that's quite big. You're below. I mean, look at the 1 minute just sloping downwards. We've deviated quite far, so they tried to do a bounce on this. Now, if you try and pick the bottom and try to here, let me get back here. But yeah, be aware. 2 o'clock interest rate decision. FOMC rate statement. Okay. 2:30 FOMC press conference with Chairman Walsh. You got to be aware that even when they are talking, the market's going to move. Okay, even afterwards. Like I'd be done trading at at 2 o'clock. I really would, unless you want to gamble with a eval. Go ahead. Like I said, it's probably a sell day. We got 27,640 as the overnight lows. 27,640 is the overnight lows. We're pretty close to it, about 60, about 50, 60 points from it. So be aware of that. Okay, be aware. Okay, we had a run up right here, but I had a little micro pullback right there. The volume was kind of in line, the same with the other. Okay, but then we had a volume bounce right here. The moving averages were separating. If you got in here and you came up here, you really need to move to a break even, and then you would have gotten break even. Okay, I mean, look at the 1 minute; it's sloping downwards. Okay, like I said earlier, I'd be looking for sales, to be quite honest, because of the action that I saw here. We were below the VWAP, below the point of control. The action of the selling is right there. And look what we're doing. I mean, so that's what I would be looking for. Yeah, I don't know how much I'm going to be streaming next week because I think I'm going to be starting a contract. I'm going to be working with a company that needs a technical advisor. So don't know how much I'm going to be able to stream.
Order filled. Order submitted. Order canceled. Order canceled. Order filled.
Yeah, this stuff. Look at that 265, 265. Oh man. I really do need some runners. I really do need some runners. I mean, that was a counter trend trade, so um, yeah. So the reason I took this is because, well, we had a buy signal down here, but then we had another one right here. So that was like a second one that was pretty good. And what I was looking for is we had a run up and we had a micro pullback. Okay, we had a little pullback here, but look at that micro pullback with the volume. Okay, the volume right there. Okay, so once we broke that area, you can kind of get in. I kind of got in here. I was using this buy and bounce for support. The fast moving average is starting to slope upwards, okay? So I knew if we break in this area, I need to get out. We're breaking that imbalance area right there, okay? I really need to get out. So and then you can just kind of run it up. Now, I did keep it a tight stop, okay? I didn't have a runner, which I mean, if I had a runner, you could probably get yourself maybe like 20 points. So yeah, it is what it is. Just small little base hits will be fine with me. Also, you got this right up in here at around 27,690. You had these sellers right here. Remember what I said earlier about the overnight lows at 27,640. Okay. So if you look at the 5 minute right here, this is the kind of stuff you really need to look for. When you look at the 5 minute, and you see these sellers right here. I think what is that? 300 and 200. You got about 500 sellers right here, and we closed right here. Okay, and also we're trading up above that. Okay, so 720 roughly. Okay, and we're right here. I'm thinking these guys are not getting rewarded. These sellers are not getting rewarded. So I was looking for a little squeeze. Okay. We didn't it didn't run and we didn't get a run like I thought we would, but hey, I don't care. You know, FOMC meeting day and I'm up, you know, on two accounts. It's kind of weird that they're both at 265, but hey, it's kind of weird, but it is what it is. So, wait a minute. I don't want subscribers only. All right, guys. Uh, it's 10 o'clock. Why is this subscribers only mode? Did I hit the wrong button today? This can't be subscribers only mode. Why is that happening? I'm not good at this streaming crap. Alrighty, what are we doing? I might have to restart the stream. I don't know why this is saying turned on subscribers only mode. Only channel subscribers of 1 minute or longer can send messages. Okay, that's fine. That's fine. I don't care about that. All right, we're good. I thought it meant like only the subscribers can actually see the stream. Yeah. All right. I think we're good. I think we're good. Boy, this action today is just kind of looking like it could be an inside bar day, you know? Looking like it could be. It's kind of strange. I got two accounts at 265. I mean, both of them have made 13 and a quarter points. So 13 points. I mean, that's 26 points. I mean, that's a decent day. 265. That's that's a decent day. That's like $500 day, $500. Okay. I'm not looking to pass an eval today. I'm not looking to pass it tomorrow because I won't be streaming and I won't be trading tomorrow. So that's kind of like blah. All right, we got that 100 single order buyer, single order seller right there. That 100 single order seller right there. We got these sellers down here that got trapped, and then we had ended up with like a 5 minute hammer. It looks like. Uh, and we got this right here moving up. That 100 definitely is getting trapped. Up, gonna have a little squeeze on these shorts, ain't we? So So how I normally play no so how I normally trade, I'm only trading one single contract, and that is just because well, the reason I'm trading one single order contract is a crap like this. US strikes will take place against Iran in response to attacks on US targets in Jordan. Okay. So we've got like ever since this Iran crap has been going on, I've just downsized like, just one contract. It's very rare that I'll trade two, and I definitely don't be trading three. So I think like the first month is when I blew up like two funded accounts because I got caught up in news. I was slinging around 2, 3 minis, and I got caught up in news, and it's like I was like, man, I can't be doing this. So, and I definitely ain't trading personal accounts. So when they stop this crap, I'll be fine. I think earlier in the week, Iran wanted to talk, or Pakistan and Iran. They're like, hey, we got to have negotiations and blah, blah, blah. And Trump's like, okay, we're going to meet. And then all of a sudden, they attack the U.S. Base in Jordan. And it's like, come on. When is this government, the U.S. government, going to understand you're not going to make a deal with the Iranians? Okay. The Ayatollah, you're not going to make a deal with them. They don't want to make a deal. They want to play with you. Okay. They don't want to make a deal. Now, the average Iranian person does because they're good people. It's just their government's whack jobs. Kind of like most governments in the world. You got world leaders that are nutbags running the world. It's just crazy. Yeah, man, this is. I mean, we are seeing some participation. I'll be honest. I did not think we would see this much participation right here. Okay, we're seeing quite a bit. I mean, you got 200, 200, 300, 200, 300 right there. Well, 290. I say 300. You got another 300 right there. I didn't think we'd have this participation, to be quite honest. You got the New York VWAP just sloping downward, so I'd be looking for shorts. So, like I said earlier, I'd be looking for shorts. Uh, So yeah, so the 265, okay, so account 30, we made 265. That was a long, okay? Account 27 was a short, 265. Weird does 265. Okay. Uh I gotta take care of that here. Let's just switch over to MNQ U6 real quick. Let's switch over to trade a micro real quick because I gotta get rid of that.
Order submitted.
Okay. What the heck is going on? What? Okay. I don't trust this. Where's my Rhythmic Trader Pro? I don't trust this crap. I don't know what just happened, but I didn't get confirmation. I just had to cancel a submitted order. Where's my Rhythmic Trader Pro? I was an idiot. I didn't have it up to begin with. Um,
Order filled.
oh my God. Jesus, man. Like I said, I didn't trust. I don't know what the heck that was, Ninja Trader, but you are a nutcase. Yeah. Wow. Okay, 265, 289. Okay, I took care of that. That was like, I don't try. Here's the thing. I'm being very serious about this. I was stupid about this. I didn't have Rhythmic Trader Pro open. When you have, I'm being serious about this. When you have Ninja Trader up and you're trading, and let's say you're trading Golden Ox or Apex, or you're trading Rhythmic, okay? You need to have Rhythmic Trader Pro open. You must. You must have this open. You must go to positions and you must keep that window open. Okay? You got to keep this window open right here. You got to keep this open because if you get into trouble, you can always click this little. When you're in a trade, these little X's will light up. Okay? And you'll be able to see stuff. You can click it and then click OK and it closes out the position. You must do that. If not, you can get yourself in trouble. I have. Okay. I remember one time I was up like $1,000 on one trade, and I got, and by the time I was able to get Rhythmic Trader Pro open and close the trade, it done gave back like $500-600 profit. It was nuts. Okay, so you have to have that open, folks. Please have it open. Please, we're in a big fat consolidation, so on this 5 second, I really wouldn't be doing anything. But at least we got the 289, the 265, 289. Okay, so we got that going. Oh man, that would actually been a pretty nice short. But we're right there at the low of it. But if you look, we had a run down, and we had this right here. If you look at, I need to update the indicators, man. If you look at the 1 minute, we were the volume was the volume was a little high, but hey, we had a run down. This is what I was looking at. We had a run down. We had a little micro pullback right here, and then we're kind of running back down, and boom, you have that break in that area. Yeah, that's a pretty good short. I don't know if anybody got that. Anybody got that short? Anybody got this short? I mean, if you tried it right here, you kind of got in and took a small loss. Um, anybody got this short? Breaking the lows. We're at 27.640 is the overnight lows, folks. We're right at the overnight lows. Okay, we are right at the overnight lows. Beware, we are at the overnight lows. Okay, we are at the overnight lows. Uh, okay, we are at the overnight lows, folks. I would be very aware of what is going on. Okay. Let's take off this micro right here. Okay. I just be aware we're at the overnight lows. 27,640 is the overnight lows. Okay. We could bounce off of it. You got 264 aggregated seller. They need to get rewarded, or this thing is not going to do much if they don't get rewarded. Okay. They need to get rewarded, folks. They need to get rewarded. Okay. Even if you missed this one right here, we're breaking that consolidation area. And even if you got in on this one right here, you still trade it down and probably got yourself like a 40 point trade. Okay. That volume on this pullback, on these pullbacks are a little steep. You've got the cumulative 5 minute delta at negative 892. Oh wow. 27,640. We're right at the overnight lows. 27,640 is overnight lows, folks. We are right there. Are they going to break it? They broke it the past couple days. They've been breaking it. So be aware of that. Be aware on the 5 minute. If you look over at the 5 minute, you got to be aware that the 5 minute, you are up against the sellers right there. Okay. You got, look at the 1 minute, you got sell, double stacked sell imbalance right there. You got to be aware that the 1 minute that could be setting up a micro pullback. Actually, it's not because of the volume on there, but hey, you just got to be aware that we have a rundown. You got two green bars. So we could be keep moving down. We're at the overnight lows. 27,640 is the overnight lows. We're kind of holding it. You got a buying balance right down at the bottom, man. You had a buying balance and it just immediately got taken away. Got to be aware of that. They're pretty strong on the holding off the 27,640 is the overnight lows. They're pretty strong in holding it off, folks. Um, Wow, they just took out that buy imbalance. We're still in consolidation. We're forming out in the current 5 minute. We're forming
Order
we're
filled.
forming out on the current 5 minute. We're kind of forming out that volume, to be quite honest.
Order filled. Order filled.
Yo, what the heck is Ninja Trader doing today to me? You people are nuts. You know that? You people are stinking nuts. We're in a big fat consolidation area, folks. You got the current 5 minutes forming out some big volume. On the main chart, you got the main chart. The 5 second main chart is looking like a sell. We're holding it off. Look at the 1 minute. We got big, long consolidation area. So you got to be aware of this. The previous 5 minute has just closed. Look at the previous 5 minute at the bottom right. You got the big inside bar. You got the big volume being formed out. So what I'm thinking is, this is what I'm thinking. If we break that previous low, if we break that, you see where that 264 buyer is? Or I mean, I'm sorry, that 264 seller. If we break the low of that candle, we could probably keep selling off. We got 248 sellers coming in. They could get caught. The 53 single order seller could get trapped here pretty quickly. If we close the 1 minute, the top right, if we close the 1 minute above this, they could get squeezed out here. See that previous 5 minute, we have a nice big buy volume. We have 644 positive delta.
Order filled.
We're just sitting here consolidating, folks. We closed above that 1 minute. That is bullish. Okay, we closed above that 1 minute. If we break this 1 minute high, previous 1 minute high, they could get going.
Order filled.
Man, they are really just look at that 1 minute. They are just I'm looking at the 5 minute. You see this 5 minute right here. You see this 264 at 248. They're not getting paid off. Okay. These sellers are not taking any heat. Okay. These sellers are not taking any heat whatsoever. The volume being filled out on this candle right here is pretty good. We broke this high right here at previous candle. Okay. We really are not getting anywhere, but they're forming out the volume right here on this 5 minutes. You can see the volume being formed out right there. Okay. So they're just accumulating some volume. Do, do, do. FOMC meeting days, folks. FOMC meeting days. Beware. Please beware. I mean, between two accounts, I'm up like 500. So you just got to be aware. Ooh, we're going to be breaking the low. We could be selling off even more. We're at the overnight lows again. We're at the overnight lows again. So
Order filled.
we are at the overnight lows again.
Order submitted.
We are at the overnight lows again, folks.
Order filled.
All right, I took that little short right there. I took it right here, and you see this little candle right there? I was thinking, we're breaking that, I'm out. So I just got out. You can always get right back in, but I just don't like it because we got that 27 right there. 27 single order, and we kind of ran up. Okay. I just don't like that because you got how many retail traders are slinging around 27 contracts on the NQ? Not very many. Okay. So you got to be aware of this crap, folks. You got to be aware of this crap. Okay. We're below the overnight lows. We're below the overnight lows, folks. Okay. We are below the overnight lows. It's looking ugly. Looking ugly. We got some buyers coming in here, man. Beware, 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 beware short, man. Don't be trying to short the bottom where beware. We got some buyers. You got 27, you got 31 single order contracts coming in. You got 312 aggregated buy volume. You got some you got a market maker institution that's starting to sling some size into the buying. Okay. I mean, and here's the thing. It could be those shorts taking profits, man. It could be those shorts taking profits. We have no idea. It could be those shorts taking
Order
profits.
filled.
Okay, we have no idea. It could be those shorts taking profits. They got caught. They got caught. Wow, if this was actually a mini, this would be a really good trade for me.
Order filled.
Okay. Um I mean, I'm out. I did take that short right there. You got to be aware when I said beware, we got buyers coming in, slinging some size. I was looking for them to go up. Okay. They didn't. They got caught. We had a nice little base area. We're still sloping down. We've deviated from the 1 minute quite far. We're selling off. We're breaking the overnight lows. You got them sellers right there. I mean, you got these buyers right here. I was looking for a move upwards. But when we broke this area right here, you had 27 single order, 31 single order, okay? And then you broke that area right here on a double sell imbalance. You got to get in right here and start trailing it down, folks, okay? And then I just got out up in here, okay? That's just something you got to do, folks, okay? That's just something you got to do. It's 1027. Okay. That would have been a really good trade for me. That would have been like $1,000 trade for me. Okay. But it wasn't. Okay. I was trading micro. That could have been an $800 trade, 40 points. Okay. But hey, I didn't. Why? FOMC meeting. I'm not going to get back the profits I've already made. It's FOMC meeting day. I was up $500. So I'm just pissing around with some micros, man. Okay, and I ended up with, like, I don't know, $80 trade or something like that. That could have been an $800 trade. Okay, that's fine. Do I care? No. Why? Well, tomorrow's another day. Well, actually, I'm not trading tomorrow, so it's not another day for me. For you, could be. Uh, and also here's another thing. Stop trying to pass these evals in 1 to 2 days, okay? Just start trading and being consistent, okay? Just start trading and being consistent, okay? That's all you got to do. Get your base hits. Don't be looking for some home runs, 100 pointers all the time. Do you do you think these desk traders make 100 points average a day? No. There's some of them that do. They're pretty talented. But if 95% of the people fail in the futures market, what and, and don't take this the wrong way, okay? But if 95% of the people fail at futures trading, okay, what makes you think that you're going to come in and be that 5%? That's like being a football player in high school thinking you're going to go pro. What's the chances of that happening? Okay. I mean, don't take it the wrong way, but what makes you special that thinks you're going to be cranking out 100 points consistently? I'm just trying to make things real for you. That's all. This really wasn't a very good. Okay, let's go over this. Okay, okay, for one, this was a good signal because it was a double stacked sell imbalance. Okay, so I got in there and then I covered it down here. So you got yourself about 40 points. Okay, that's good. All right, I did it on a micro because I switched over to micros. I mean, it's FOMC meeting day. I'm not looking. It's FOMC meeting day. I'm not looking for like 1,000, $3,000 day. Okay. Monday was good. Monday was a $2,000 day. That was awesome. Okay. I enjoyed that. That was fun. Yesterday, I looked yesterday. I had some stuff I had to do yesterday. Yesterday was a pretty decent day. You could have probably done about 500. Okay. I mean, you could have gotten yourself 20, 30 points. Okay. You could have gotten yourself 20, 30 points. Not a problem. Um, I mean, it wasn't no $2,000 day, and even before uh, the U.S. Iran conflict, before all that, my average for the day, I think I was trading with Motorwave. My average for the day, we got a buy and bounce right sitting right there. We're above that moving average. You got to be aware you got some sellers
Order filled.
in that area. So if we break
Order filled.
that area, you got to be out. If you break that area,
Order
you
filled.
got to be aware that you uh,
Order submitted.
all right, I'm moving to our break even. If we actually break this high, we could be getting going nice.
Order submit. Order filled.
Okay, I'm just going to take another little trade off of there. Okay. Uh, here's the thing. I just took a loser and then just took a winner. I don't know if you saw the P&L, but um, I'm trading over on the OFB entry. Okay, I'm trading off OFB entry. Okay. Um, here's the thing. Here's the thing. So we had a nice little buy and bounce right up in here, and I'm thinking, okay, we're going to be squeezing out these shorts. Okay, so we came in here. That volume on this one was kind of low compared to that candle right there. So I went on ahead and got in. When we started breaking this buy and bounce area right here, when we started losing that support, I'm thinking, nope, I'm cutting the trade. Why? Because we're got a big red candle. It's moving down pretty quickly. The volume's picking up. I just cut the stinking trade. And then all of a sudden, I see this right here. So I get right back into it. Cut your stinking losses quickly, man. Okay? Do not hold on to this crap. Do not hold on to it. Okay? Do not hold on to it. Okay? When you start seeing a ramp up and you start going like this, take some profits, man. I'm just pissing around with like micros on a little bit of stuff. Okay? Just, you know. Um, yeah. I mean, small loss, winner. Okay, no big deal. Who cares? All right. I cut it. Why? Because I thought, I mean, look at that candle right there. Okay. You see this right here. All right. I don't even know what the footprint was. I normally trade off of a footprint. Okay. But I'm seeing just a little pissant volume, man. It's just, I don't see very much. You got a lot of buyers coming in here. Look at this. Yeah, on that 1 minute, look at all them buyers coming in. They're trying to take on this 5 minute right here. They're trying to take on these sellers. Okay. Um, what time is it? It's 10:35. Okay, it's 10:35. Yeah, if you get into something like this, you gotta be aware there's a bunch of wicks right here. So you got the cumulative. This up here, this right up here is a cumulative 5 minute delta. Okay, 5 minute cumulative. I need to change this. We're at 352 positive cumulative delta, but we're on a red candle. A current 5 minute cumulative 5 minute candle is currently red. So we got an ATR of 32. That's pretty nice. I didn't expect that. I didn't expect no 32 ATR on a 1 minute on FOMC morning. Okay, I didn't think I would do this good, to be quite honest. Um, the thing is, you got a lot of sellers right here. You got 264, 248, 210. You got some buyers come stepping in. Okay, you got some buyers stepping in. We're still below the overnight lows. The overnight lows is 27,640, and we're still below it. Okay, we are bearish, folks. So if you're looking to try and catch along, uh, you might get it. You might get it. But these shorts right here, all these shorts have got to get uncomfortable. All these shorts right here. You see all these shorts right here? Okay. An institution's got some financial interest. So if you start coming up and breaking this area, 27,700, yeah, sure. You could possibly squeeze them out. But right now, don't look like that's happening. I tried it. I tried it right here. Okay. Okay. I tried it right here. Okay. I got in here. I took a stop right here. I'm like, man, forget this. I should have just stayed in because the moving averages were separating. I just should have went on ahead and stayed in. Okay. But I just cut my losses really quick because I have the philosophy I can always get back in. Okay. I'll take a small loss. Boom. I'll take a small loss. And then I saw this. I'm like, oh, I'm back in. Boom. Get yourself a trade. I took a small loss and then I made some. I made more than that small loss. Okay. Could I made more? Yeah. If I would have held it, yeah. Gotta let the work trade, man. That's what them gurus say. Gotta let the work trade. Gotta let the trade work, man. You gotta let that trade work. Gotta take your full stop out. Blah, 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 blah. Them gurus are just selling courses, giving you regurgitated BS that they learned from somebody else. Okay, half them idiots don't know how to trade. Half of them just have money selling courses. They get about 10 evals. They blow like 8 of them, pass like 2 of them, and they just show you the good ones. That's all them gurus do, man. That's all them gurus do. Just selling regurgitated BS, blowing accounts left and right, and only show you the good ones. That's all they do. Some of y'all are looking at me thinking I'm a nutcase for trading a 5-second chart. I am a nutcase. I will admit I am, but not at trading. Okay, I'm dead serious about trading, folks. Okay, I ain't no stinking nutcase. That's a trap to buy you right there. So you need to be moving to a break even. Why? Because this thing rip your face off, man. That's why. See, here's the thing. If you took a short right here, and you see this candle right here, okay? You see this candle right here, you might want to take some profits. Look for a pullback, see if we're going to be breaking the pullback and get right back in and see if you can get a dump. Why not do that? Why take a full stop out? Why not just go ahead, get in some contracts, take some profits here, okay? See if we're going to move down, and if we do break it, maybe you add back into the trade, okay? There's no problems at all whatsoever about taking some base hits for some profits and then adding to it when it gives you confirmation. There's absolutely no problem doing that. I have a problem doing it because I've just got the mindset of Trump, Iran shooting missiles at each other, having a slap fest, and then all of a sudden they want to be friends, and then they're not. Then they want to be friends, then they're not. You know, that's what you see what's happening. You see what's happening. See, this is why if you take that sell, take some profits here, up, have a little micro pullback. Look at the volume. Okay, volume's really pissing, to be quite honest. But let's say you get in here because of this candle right here was a little inside bar. You had a little spinning top, but yet we start breaking that area and you get back in. That's fine. And then you get out right there. That's fine. Get yourself about 20 points. Okay. That's a good base hit. That's a really good base hit, to be quite honest. 5-10 points is a good base hit. 20 points, that's like a double. Okay. That's like a double. You could sell 15-20 points. That's a double, man. That's a double. You got to protect your capital you're trading. Okay. I don't care if it's an eval. I don't care if you have the mindset, well, it's only $20. It's only this. It's only that. Blah, blah, blah. Who cares? Okay. That's the wrong mindset to be quite honest. Because even if it's just an eval, how in the world are you going to pass if you don't protect the capital you're trading with? How in the heck can you even pass? I mean, think about that. I mean, sure, if you want to try to buy the low and try to get yourself 100 points and full port it, and then try to pass some evals and blow like, you know, 80% of them, and you're happy with that, then that's fine. Even a blind squirrel can run into a walnut tree every now and then. But is that blind squirrel consistently running into walnut trees? What I'm teaching here, you ain't going to hear from these stupid gurus out there. Okay? What I'm teaching here is getting yourself some base hits. understand the area that you're in. You're in FOMC meeting day, okay? It's 10:43, okay? You need to understand uh, the trade light today. Why? Why would you want to trade light today? Some people will be like, "Oh, but the FOMC, there's lots of volatility. I can pass an eval, blah 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 blah." Well, you can also blow it up too. Like I wouldn't be trading no stinking account, like a funded account. No, not today. FOMC meeting, not today. What I'm doing, rolling accounts, rolling. Keep them doggies rolling. 28, 27, 30. Okay, no big deal. Okay. Um, account 30, 265. Account 27, 350. You know. Okay. Working on that, man. Working on that. That's the thing, FOMC meeting day, some people will be like, "Good volatility, man. I can pass evals," or you can also blow it. So why would you not just go ahead and try to have a trading plan that I'm teaching to be consistent, okay? Um, I would be careful about this. Okay, you had some pretty good volume, but we're consolidate, man. Look at this, okay? You're right in the middle of this crap, okay? You're right in the middle of this crap. Okay. You're not looking to buy here and sell way up here. Can you get a slice of the pie when the momentum's up? Yeah. Put the odds in your favor. When you're seeing me trade, okay, most of the time you will see me get into a trade and get green and not take hardly any heat. But that's my style of trading. Your style of trading could be like, I don't care about no stinking heat. Who cares? You know? You might be able to take more heat than me. I'm not like that. I'm not built like that because I've been trading before the micros came out. I had to trade the minis. I've been trading before the micros came out. I've been trading before Top Step even came out. Okay. Been trading before these fake prop firms came out. So I had to do capital preservation. And of course, being a software engineer, yes, I did blow up some accounts. I think I blew up like 8, 10 grand. I'm not sure. Uh, But yeah, I had to learn capital preservation. And that philosophy I've had for years, and now I'm trading with these fake prop firms. Uh, that years of conditioning of capital preservation has not left me. Every now and then I will get tilted and I'll be like, yeah, it's just an eval, screw it, who cares? But, and I know when I'm in those mindsets and they're not good days. Okay. Uh, we got double buying balance. One of them got taken away, the other one stayed there. We're above the 1 minute movement average. Uh, if you're going to get in something like that, you got to be aware that you had a buy and bounce right here, and we had a little wick right here. So if you are in right here, you need to be moving to a break even and just manage the stinking trade. Okay. You got some wicks right there. Okay. You look at the volume of that right there. Look at the volume of that. Look at the volume of this one. Okay. They're still holding it off. I'd be getting out. If you got in here and you didn't start taking profits right up in this area right here, I really don't know what to tell you. Or when you see this big, huge engulfing candle on this one right here, and the volume is picking up down here, and you're not cutting the trade, I have no idea what the heck you're waiting for. Just take your stinking 5, 10 points and move on. Okay. I don't know what you're waiting for. The market moves in an ebb and flow. The market does not go straight up or straight down. It runs. About 80% of the time, it's an ebb and flow, okay? You're not trying to buy here and sell here. You're looking for the move, the ebb and flow, to be moving upwards and then get a slice of the pie, okay? You're not, as soon as you stop being a greedy pig, I can almost guarantee that your profits will start happening and you'll start building up an account. I can almost guarantee it. I can almost guarantee uh, when traders stop being greedy pigs and actually focus on what the market's telling you at the time and not let the greedy pig syndrome kick in, I can almost guarantee you'll make money. Like right now, if we ran up, we had a buying balance right there. Moving averages were separating, but we had a little inside bar right there. And look at the volume right there. It was low, lower than these three right here that ran up. So maybe you get in here, you see a nice big pop like that. So when you get in and you see a nice big pop, your stop's right down here, okay? At about 10 points, you get a pop for about 10, 12 points. Take some profits, okay? Take some profits. You can always get back in. You can always get back in. Okay, you can always get back in. Who cares? You can always get back in. Commissions are cheap. Well, not really. With the fake prop firms, they're not. But, it is what it is. We got 206 aggregated seller right here. 26 single order contract. We closed above it. So they could get caught a little bit. But you got them sellers, man. You got them sellers right there. You got to be careful. I was running my mouth and I was too busy calling people greedy pigs to get in on this. But do I really want to? Probably not, man. It's like 10:50. I need to stop. I mean, a decent day, okay? A decent day. A decent day. 265 plus 351. It's a $600 day, okay? It's a $600 day. On FOMC meeting. On FOMC meeting. It's a $600 day on FOMC meeting. What the heck what? I didn't expect that. So maybe I should just quit while I'm ahead because I know as the day goes further on, the odds of me giving my profits back are pretty high. Okay? They're pretty high. Look at this, folks. Crude oil at 10:30. That already happened. I don't trade crude. Not anymore. I blew up like I think a $2,000 account, personal account, years ago. We're talking like 10 years. Okay, I blew it up, so I don't trade crude oil. Okay, we got at 2 o'clock U.S. interest rate decision at 2 o'clock FOMC rate statement. Okay, you have Chairman Warsh speaking at 2:30. FOMC press conference with Chairman Warsh. I mean, come on, but right there, man. 1400 hour, man. If you're green, why are you pressing your luck? If you're green, why are you pressing your luck? Okay, I'm being serious too. If you're green, why are you pressing your luck? Just move on. Like, who cares? Like, just move on. You got to run up. You got this bar right here. You have a pullback. This is a pretty steep bar. That's 50% of the move right there. And also another thing right here. If you have a run up right here, you got a wick right there. Yeah, you got a buy imbalance. You got a bar right there. Ooh, they just stepped up to the plate, didn't they? and you got a little sell right there. I was looking maybe for a break of this to go up, but you got this big red bar right here that broke 50% of the move of this little up. Okay, that's no. And look at it. No. You want stuff like this. Boom. Okay. Little inside bar. Didn't break the high, didn't break the low. The volume's kind of low. So you get in here. Boom. What do I say on pops? What do I say on pops? When you get a pop, if you get a pop, if, if you get a pop and you get up here, you get yourself 10 points, sell some, move to a break even. Or if you're in on one, move to a break even. Manage the stinking trade. When it starts coming down like right here, just take your 5, 6, 7 points. Who gives a crap? Okay. Move on. Next trade. Move on. Next trade. Stop looking for these 50, 100 pointers. Okay. Be extremely consistent. Here's the thing. If you're prop farming and you're blowing accounts left and right, and then you pass some, and you get a whole bunch of funded, okay? And then you do the same thing. Let's say you spend $10,000 a month doing that, but yet your cost of business, because that's what some of them think like that. It's just a game, plus it's the cost of business, okay? And let's say you spend like 3,000, you make, I don't know, 7,000 profits. Okay, that's fine. Some people can do that. They can just treat it like a business. What if you have a really bad day and you blow like 8 of them, and you got a whole bunch of funded accounts and you're prop farming, and all of a sudden you blow all it's just not good. This prop farming stuff is just not good. And also that's why these prop firms have put in these consistency rules and stuff. Also, here's another thing. Why not learn how to actually trade a strategy and a trading plan? Because what would happen? What's going to happen? I don't know what's going to happen, but what if in the future these prop firms just go belly up? Or these prop firms are like, okay, we've had enough of these gambling degenerates, uh, and they don't allow stuff, and they really tighten the screws to you. Really only traders that are consistent, that have a good trading plan, are going to be able to survive. So, what I'm teaching, you can easily go to a personal account trade. Okay, you can easily do it. And also, here's the thing: if you're looking for 50, 100 pointers all the time, okay, you get them. Yeah, no big deal. You get them. But what if you can consistently? Here's the thing. Let's think about this. Let's say you can consistently do through your wins and losses. Let's say you can consistently. I don't know. I got what $600 today. Okay, 30 points. Okay, no big deal. Let's say you can do 25 points consistently, or even 20 points a day consistently. Okay, times 20 is 400. Okay, that's $400. Okay, that's fine. Out of $400, consistently between your wins and losses, let's say you do that times 4, that's $1,600 for the week times 4. That's like $6,400 for the month. What if you're not passing left and right and blah, 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 but you're consistent? Okay. Let's say you're consistent and you do $6,000. Okay. What if, let's say you've got like 2 or 3 funded accounts, but you're consistent. That means you can consistently get payouts. I know some traders don't want to hear this. Their consistency, blah blah. Sorry, but that's just reality. I mean, that's reality, folks. I mean, the other week I did, I don't know, it was like $2,000 day, then it was like an $800 day, then a $400 day, and then like the past like Thursday and Friday it was like blah. I think one of those days I actually lost money because of it was a break even day. So after all the commissions and everything, it was just it, I actually like small red day. Like who cares though? All right, not every day is going to be profitable. I mean, sure, Monday I came in here and did 2,000, and then today I'm doing 600. Yeah, okay, no big deal. But being consistent is and taking small profits and being consistent with your base hits. Do you realize what that does to your mentality for your trading? It's good. It feels good. Here, let's look at I, it's 11 o'clock. I need to be done. It's FOMC meeting date. All right. Here, let me close down Rhythmic Trader Pro because I'm not going to be trading anymore. Let me make sure there's no ghost orders out here. Yeah, no ghost orders. Positions, orders, none. Okay, we're done. Here, let me shut this down. Okay. All right. Oh, my here, let me blank my screen out real quick. I'm gonna blank it out real quick. I'm gonna because I don't know if trade performance. I don't know if it's gonna show my personal. I got a personal account with Ninja Trader. I really don't want people to see that. Okay, let's. Oh my word, Ninja Trader, please, for the love of God, could you just work? I'm working with Rhythmic. I am so close to being vendor approved with Rhythmic. I'm working with Rhythmic, and I am so close to being vendor approved. What is today? Today's the 29th, the 27th. 52%. 52% win rate. Okay, that ain't no problem. 52% win rate. Okay, no big deal. Profit factor is 3.3. That's actually phenomenal. Uh, let's look at today. What is today? 29th. Then trade. Come on, Ninja Trader. Okay. Uh, let me bring this over. Jeez, man. Boy, this thing is horrible, ain't it? So so this is what we have here. Okay. Total net 600. Gross 650. Okay, whatever. Uh, gross loss. Okay, max drawdown. Look at this, folks. This was today. Okay. This was me trading the minis. Once I got these two accounts up and I had a few good winners on the minis, I just switched over to micros. But look at this. Max drawdown $25. Uh yeah. I got a profit factor of 16. That's like unheard of. I mean the commissions, yeah. Okay, but no big deal. I'm still profitable. because I didn't make that many trades. Total number of trades, 10. I had 8 winners, 2 losers. 8 winners, 2 losers. Percent profitable is 80%. Average trade $61. Average winning $82. Okay. That was the micros kind of skewed this a little bit, but that's fine. Righty. I mean, this is 80% win rate. Okay. I mean, look at the drawdown, $25 max drawdown. Like, I mean, that's what I'm saying. You hardly ever see me take heat because with order flow and the way I'm trading it, I'm not looking to pick the bottom and sell the top. What I'm looking to do is I'm looking for an edge. I'm looking for momentum of big players, and I'm looking for the momentum up or down. Okay. You saw me take a long. I think I took one trade on account 30 and it was $265. Another trade on count 27 and was around like I don't know, 265, I think. And then I just switched over to micros, and then I just started trading the micros, and then I ended up with 350. Okay, I mean, it could have been like $1,000 day. Okay, if I would have traded micros, if I would have traded minis, I switched over to micros because it's like FOMC meeting. I really don't want to mess with it, so I just yeah. But max drawdown 25. Okay, you got a profit factor of 16. That's like unheard of. And how am I doing that? I'm doing that by putting the odds in my favor. Okay. I'm doing that by looking at the overnight lows of 27,640. Okay. I know where the numbers are. Overnight highs. I know where the numbers are. Overnight highs 28,178. Overnight lows 27,640. Previous day highs 28,228. Previous day lows 27,603. Like I already know all that. Okay. So, and then what I'm looking for is I'm just looking at the 5 minute. Okay. Yes, the New York VWAP is sloping down and we're below it. Okay. But what I'm looking for is where are these big players? Where are the buyers? Where could the sellers get trapped when we have a short squeeze? Well, we didn't have a short squeeze, not yet. We may not. I don't know. I don't care because I'll be done at 12 o'clock in about an hour. So I don't really care what FOMC does because there's a lot of other stuff I need to get done. For one, I need to get version 1.5 out to you. Um, I'm just looking to put the odds in my favor. When I start seeing buyers come stepping in, like I thought we'd have a short squeeze right here, okay, and we didn't. So okay, no big deal. What I'm looking for is to just put the odds in your favor. That's all you need to do is put the odds in your favor. Uh, if you want to see something like this, it's really, you got a wick right there. Okay. You have a buy and balance, but we close right at it and you got a wick. That's not strength to me. Okay. That's not strength. What strength is a close up here. That's strength to me. And I'm trading a 5-second chart. Some people will probably think I'm a nutcase for doing that. But the thing is, this market can move. The NQ within 5 seconds can stink and move. Okay. And I'm just trying to get in on some of that move. Like this one. I took a small loss. Got in here, took a small loss right here. We started pulling back. We started breaking that. And I looked at the volume. I'm like, well, it ain't too high. I might as well just go ahead and try it again. And then I had a winner. Okay. So I had 8 wins, 2 losses. What? There we go. Um, that's really not a micro pullback to me. I mean, look at the volume. Yeah, it was dried up. We got about 50% of the move. We kind of ran up about 50% of it's right here. But we had like 1, 2, 3, 4, 5, 6 little spinning tops. They had a big candle right there, and the volume was kind of dried up a little bit. I mean, you had 34. This is just hard to take. I can't take that, man. That's not even in my trading plan. I can't even take that. I can't do that crap. Also, here's another thing. If sometimes you see me take trades when we're below the 1 minute, but you got to understand I've been doing this for quite some time, so I kind of like understand the ebb and flow of things. But if you really want to just put the odds in your favor, trade this area. Trade this area for longs. Don't be trading shorts here, okay, on a pullback, but just understand when you've extended quite far, a pullback is inevitable. It's going to happen. It might happen here. It might happen way up here as we keep running up. You don't know. But when you deviate from the 1 minute, okay, the odds in your favor by trading this area, okay? That's the kind of stuff on a 1 minute, okay? Trading a 1 minute, you want to short this area, okay? When you start seeing the 1 minute candles like this with these wicks and the inside bars right here, be happy if you got a piece of the pie right here, okay? And you got these, well, actually, we did take a short up in here. I took the short up in here. Did I short here and cover here? No. Did I short here and cover here? Yes. I'm not looking for a whole move. I'm looking for a piece of the pie to put the odds in my favor. That's why I'm putting the odds in my favor. When I put the odds in my favor, I'm able to get a profit factor of 16, which is unheard of. That's actually that is really not normal for me. Okay, profit factor of 2 and 3 is usually what today an 80% win rate. Trust me, I don't get a percent profitable 80%. I don't always do that. Okay, I don't always do that. I think Monday I can't remember. I think it was 60% win rate. So we have number of trades 8, losing trades 2. Okay, no big deal. So, and my drawdown is $25. And I was trading the minis a few times before I switched over to the micros. And I'm like, yeah, I'm done for the day, but I just want to keep going. I mean, a max drawdown trading minis of 25. I mean, really? Like 1 point drawdown? Why did I get a 1 point drawdown? Why did I get a 1 point drawdown? Because I'm putting the odds in my favor. When I see a big fat red candle like this and the moving in the 1 minute, we're over here on the 1 minute. We're over here on the 1 minute and we're kind of like sloping down. I mean, yeah, you want to 620, and you're below, you close below that right there. You're not looking to short here and cover here, but can you get a little piece of pie right here? Yeah, more than likely you can, because on a 5-second chart, uh, if you see, it's kind of hard to take this sell because you're right in the middle of a consolidation, but you're getting ready to break this low, and you broke it right here, and you got to sell, and the moving averages are sloping down, okay, and you got the volume kind of picking up. So yeah, short here, you took no stinking heat. You get a big down move, 10, 15 points. What do I tell you to do on the spikes up or down? Take your stinking profits, people. Take some stinking profits. If you're in multiple contracts, if you're in multiple contracts, sell some here for about $300. Okay, move to a break even, manage the rest of it. When you start seeing stuff like this, you're like, man, I got to get out. We're up here. Okay. We have another spike down. Maybe you want to get out up in this area right here. Okay. And then make yourself like 25 points, $500 trade. Okay. Put the odds in your favor. Stop looking for the big stinking 50, 100 pointers. Put the odds in your favor and start doing your base hits. And you will see your account go from like 500, 1,000, 2,000, 25. And before you know, you're past. You're done. You're past. Just by doing simple repetitions of doing this stuff and not caring if you get stopped out. Just simple repetitions, consistency. A lot of people don't like hearing that word. Oh, but these prop firms, they want consistency. Uh, yeah. They also want discretionary traders, which is to me, I don't know. They do not want discretionary traders. Okay, they don't want that. What these little fake prop firms want is losing traders. Okay, because well, they know they make money. So that's how you do it by putting the odds in your favor. Okay, why did I was trading minis and you just saw on my stats a $25 drawdown. That's crazy. Okay? Not, I mean 1 point drawdown. How can I get a 1 point drawdown on like 10 trades? Actually, 8 winners, 2 losers. Um because I'm putting the odds in my favor. Okay? I'm getting trade. I'm not looking for this whole move here. I'm looking at the 1 minute and the 5 minute for context. Okay, we closed below that moving average. We were like flatlining, so I'm looking for another move down because we're in a big fat range on the 5 minute right here. So you get in here, you get a pop, you sell some, you start consolidating in this area. If you break that area, you got to get out and just take you know 10, 20, 15 points. I mean, that's just name of the game. Like, if you take a trade like this, you gotta understand, if you are getting in here, okay, if you're getting in here, you got to understand where you are at on a 1 minute. The 1 minute moving average is sloping down. You gotta understand the odds are really not in your favor. I don't care if it's moving up and making 20 points or above. I do not care. Wow, that really was not an A+ setup. But like I say, we have a run up. Look at the volume right there. We have a little micro pullback right here to this stacked buy and bounce area. So look at the volume on that micro pullback. It's low. It's lower than this right here. So it's not like if the sell volume was real higher, higher than these 3 green candles, yeah, you might want to pass on that. Not real ideal. So if you get in here and you get out here for about 10, 15 points, good job. $300. What's your risk? Well, your risk is probably around here about 10 points. Because if you break that buy and balance area for about 15 points, yeah, come on. Uh, the odds are no longer in your favor. Okay, the odds are no longer in your favor. We're in a big fat consolidation, folks. I just wouldn't trade. It's 11. That's why I shut it down. Oh, let me close this window out. That's why I shut it down. I went on ahead. I made like $600 today. I'm moving on. I'm done. Monday it was $2,000 day. Awesome day. Today $600 on FOMC meeting day. Okay, good. Done. If you're a new trader, wait the first 5, 10 minutes, folks. Just wait. I know you saw me take trades within the first 5 minutes, but I've been doing this for a while. Just wait. Let the market settle. Find out what we're doing. See where the big players are. They stepping into the market? Are they doing anything? As you get closer, the volume's going to dry up. The volume's going to dry up, folks, as you get closer. It's not going to be good. FOMC meeting day. Be happy with what you got. So if you got a spike down like that and you are not taking profits and locking in the other contracts, if you're multiple contracts, I don't know what you're waiting for. If you can get really good at doing this, here, let me explain something. If you can get really good at getting in here and putting and then when we come up here and putting your stop like down here, we get a little pullback. Maybe you add to the trade, okay, and you come up here and then you just kind of put your stop right here. Maybe you saw this big tail right here, and then you just get out completely. Okay, you see this sell right here. Maybe you get in here. Maybe you get out here for very small profit. I mean, I'm talking small, probably 2, 3 points. Yeah, like 3 points. If you can start doing stuff like that, I mean, you're going to really like get in here. You're like, oh, we got a tail. So we start breaking this area. I got to get out, man. I got to get out. I'm already moving to a break even. Maybe I'm moving up here to get 2 or 3 points. Okay. Cover commissions and slippage. And then we get a drop like this. Okay, that's fine. You get a drop like that and you're making like 20 points, okay? And you're like, oh, I'm going to sell some and then just manage the trade. If you can start doing that and be okay with break evens, you'll be very consistent eventually. If you look at the 1 minute, and we are sloping upwards. If you look at the 1 minute, okay, let's take a look at this. Where was this? 11:15. So at 11:15, we were, well, this ain't a very good trade, but you want to be looking at taking longs here, taking longs up in here. Okay. Maybe you want to be looking for some shorts right here. Maybe you want to be looking for some, I don't know. This is just, I mean, look at this range, man. This is just not, no. Uh, yeah, if you can do stuff like that, let's go back to the beginning. Okay. If you can start looking for shorts like here, get yourself 5, 10, 15, 20 points. Awesome. Okay. Start looking for some longs right here. Okay. You're above the moving average. Start looking for some longs up in here. Okay. Maybe you get 1, 2 trades off right here. Okay. Good job. You're not looking, you're not looking to buy here and sell here, man. Leave that to the gurus that are trading multiple accounts and then they can show you that later on because they're only going to show you the good ones. I mean, leave that up to the gurus selling the courses. What does the volume look like on the 5 minute? And the volume's kind of, yeah, see, we got the volume. See, it's just starting to dry up a little bit. Okay. We're getting closer. It's 11:23. If you're green, please stop. Just come back tomorrow. Come back Friday. I'm not going to be streaming tomorrow because I got something to do in the morning. Uh, just, just come back tomorrow, man. Okay. Uh, Trade when the volume's there. Okay. Just trade when the volume's there. I really need to get this 1.5 version out. Yeah, I just don't like this type of the days like this. This is not going to be. Look at the 1 minute right here in the middle of the consolidation. Ugh. How is the orange moving average different? Yeah, sorry I didn't read the chat. I just don't pay attention to chat. So the orange moving average, this is what's called the fast moving average. Okay. It's what these moving averages are. This is what these moving averages are. They're not just like smooth or exponential moving averages. They are Heikin-Ashi data smoothed out with an exponential moving average. So what I'm doing is I'm taking the Heikin-Ashi data, the average bar. That's what Heikin-Ashi stands for in Japanese, average bar. So I'm taking the Heikin-Ashi, which is average bar, I'm taking that data in the code, and I'm smoothing it. I'm merging it. I'm smoothing it with the next exponential moving average. So the orange is called the fast moving average, and the blue is called the slow moving average. It's basically the same thing right here. The fast right here. Okay, I just don't use it on the 1 minute. What the fast moving average is, it takes 3 periods of the Heikin-Ashi data on a 5 second chart, and it smooths it, smoothing EMA, exponential moving average of 3. Now the blue is 7 and 5. Wait a minute. This is not why. Okay, so if we take the fast, we take the slow. I don't know why that's. Could my stuff be wrong? No, I don't know why. I got to work on this. I'm refactoring some of this code. Oh, it's not saving the. It's not saving. Yeah, when it comes back up, it's not saving the color scheme. Okay, but the fast is is the orange. The fast is the orange, okay? And it's smoothed out. It's exponential moving average, smoothed out with 3. The slow is period 7, smoothed out with a 5 exponential moving average. I gotta save the color. Let me make a note of that. Um, so the color is not saving, or the color is saving, but it's not red. Okay, needs to read from the JSON file. All right. That's another reason why I'm not streaming a lot, is because I need to get stuff done. What time is it? 11:30. So this week, I don't think I'm going to get the vendor approval from Rhythmic. That might be next week. They want me to do some more stuff. So we'll eventually get there. You got to be careful. It's 11:30. I mean, if you are profitable, the best thing to do is stop. Got a lot of buyers coming in here. Look at that. You got the buyers holding off the lows. It's just the volume's drying up a little bit. It's just FOMC meeting. It's like 11:30. I mean, if you're profitable, I would call it a day, to be honest. If you want to trade in the late afternoon during the volatility of FOMC, then you might want to do it on a fresh account. Definitely don't do it on a funded account. I'd be really leery about doing something like that. So you're seeing a lot of the buyers coming in here. But you still have these sellers here. It's just like not really moving. They're just holding off the lows. Yeah, they're just holding off the lows. Like what do we have for tomorrow as far as news? Hold on. We got some stuff coming in here. All right, what do we have? Iraq's Hezbollah response could target U.S. tools in Saudi Arabia. Okay, they really need to get a hold of this. EIA crude oil inventories actual -7 million, forecast 1. Ooh. Man. We'll be hitting Iran hard. U.S. strikes will take place against Iran in response to the blah, blah, blah of Jordan. I mean, you've got. What? That says 816. That happened before 816. What in the world are they doing here? That news didn't hit that time. Oh, well. So tomorrow, got MasterCard Q2 earnings, PCE. Be careful with that. Well, that's 8:30. Other than that, you really don't have anything much. So tomorrow might actually be a good day. I can't trade tomorrow because I'll be gone. What do we got for Friday? Friday, I actually, ooh, Trump cabinet meeting. I don't think that's live. I don't think that, so. We just got to be aware that there's a Trump cabinet meeting at 10 o'clock. Uh, yeah. Okay. Alrighty. I don't think I'm going to be passing these evals this week. I need to pass some evals because I need to replace some funded accounts that got blown with this Iran war stuff. I had like over a handful of funded accounts with Bull Knox. I really need to start trading with Apex too. I want to do that when I I'm going to be trading with Bullnox. When my platform gets vendor approved and then these prop firms start using my order flow, or not using, once these brokers like Apex, Bullnox, Take Profit, Loose, and all them, once I start getting them on board as a platform that can be used with Rhythmic, and they allow people to trade with the platform, because they can ban it. I mean, I'll be honest with you. They don't have to do it. They could ban it, Apex or some like Apex. They could be like, no, we're not going to let that, because my custom platform has an ID with Rhythmic, and like Bullnox could be like, no, we're not letting that platform being used, so they could ban it. Now the platform will be able to be used with like personal accounts and stuff. That ain't a problem. But these prop firms are just, the shenanigans they play is just BS. It really is. That's why when the platform gets vendor approved with Rhythmic and everything's good to go and I got everything lined up, then I'm going to be contacting the prop firms and be like, hey, there's a new platform out. Can I be listed as a platform for your traders to use? And if we can go into EP charts right here, I'd be careful about taking trades. It's 1140. If you're green, you should be done, to be quite honest. So like EP charts, see the market like the pros, beta release coming soon. I mean, you can go ahead and create an account, and if you want to support it, that's fine. You can, or you can just wait until it gets the beta gets released. So data connection, Rhythmic, trade anywhere. It's going to run on Windows and Mac. We have different kinds of stuff going on. We have like I have the big trades. Those big trades are happening. Chart trader, you can trade right off of the chart. I built out a heat map. I built out stacked and balanced areas, kind of like what we're trading here on Ninja Trader. We have market levels that are actually marked out. We have the profile charts. So it's a basic order flow trading platform. And once I can get listed with the brokers, like all the, I'm going to go after the top ten prop firms that people use. And once I get listed with like one prop firm, then what I'm going to do, let's say I get listed with Apex as a platform that people can use. Well, then I'm going to be streaming the custom platform, and I'm always going to be supporting Ninja Trader add-on, because some people are not going to use it. They're just going to use the Ninja Trader add-on, which is perfectly fine. And if you have a license key with the Ninja Trader and you want to use the custom platform, you'll just let me know, and then I'll just just copy over your license key, and you can use both of them if you want. So it'll all be done. But that's how I'm going to do it. Once I get vendor approved, then I need to contact a broker and be like, hey, I have a platform that I developed that's released that's being used. Then if they allow it, that'll be great. I'm reading a Slack message because I'm going to be working on a contract, so I probably won't be streaming that much. I'll be because I'm going to have to. Company hired me to run their development team, so and I took the contract because, well, for one, it's really good money. I mean, $60 an hour, I can't pass up. And also, I'll be able to do that and then help that company out to get paid. And also, I'll be able to use that money that I make from them. I will be able to use it to really advertise the stream and really try to get like thousands of subscribers and like hundreds of viewers. My goal is to go full time with the streaming stuff. But I'm reading a Slack message, but I took a contract job, so I have to focus on that because that's going to bring in some good money. $60 an hour is decent money. 40 hours a week, that's like $2,400 a week. So, so I'll be running their development team, which will be fine. I'll be doing stand-ups and stuff. I don't know exactly what hours it will be, so I need to get with the project manager because I'm talking with the project manager, and I need to get with her and see like what times are these meetings and things like that. So there may be some days I'll be able to jump on, you know, or might not. But what I will be doing is updating the platform and possibly at night when I have downtime, then I'll just be throwing out educational videos. And that's another thing. When I get my custom platform done, well, it's still it's pretty much done. I mean, I can trade with it. There are some streams out there with me trading my platform. When I get this wrapped up with Rhythmic and I get a broker on board with it, and I've been thinking about this, and I could go after like all the brokers and be like, "Hey, can my platform be listed as a platform that your traders can use?" And then I'll be streaming the platform and doing that. So, or what I was thinking about doing with my custom platform, and some people haven't even seen it. Uh, there's some videos of me streaming my custom platform. So, epcharts.com. Or I might just like go after and contact the top 4 or 5 brokers out there, like I'll contact like Apex, Bullinox, Lucid, Take Profit Trader. I'll contact some of the quality brokers out there and be like, "Hey, I have built a custom platform. It is vendor approved with Rhythmic. Everything's good to go. Do you want to have exclusive rights to it for your traders for like the first 6 months of the release?" So then, let's say Apex does it, okay, or Lucid or somebody, and then you could only trade my platform with that broker. But what I would like to get it set up with is like people can use it for free, but that broker would pay me per user. That's what I would like to do. And also have it set up like, hey, I'm going to be streaming the platform and I'm going to be streaming. Let's say I get signed up with Lucid for the custom platform and be like, hey, I'm going to be streaming and can I get some accounts I can give away while I'm streaming my custom platform? that you have exclusive rights to for the first 6 months. And then they pay me, and then people can use it for free, and then they pay me per user. I don't know. It all depends on if these brokers are gonna work with me. That's the whole thing. So I there's a lot of things I can do, but right now it's just, I'm locking up. I'm going to get vendor approved with Rhythmic. It's just, we're just tying up loose end stuff. We're just tying up loose a lot of the stuff they want me to do, the copyright stuff with Rhythmic when you're connected with Rhythmic, like, they want their logo and they want their copyright, they want this in certain places. It's like, okay. And I'm a small platform, okay? I'm a small platform, so I have to listen to them. If I was a big platform with, like, a bunch of users and stuff, then I'd be like, "Hey, maybe I don't have to, but hey, I'm only working with Rhythmic right now." And the next data feed provider I'm gonna work with is, probably be CQG. I wanna get them connected too. But right now, I just wanna use Rhythmic because, well, they're the top one, and get everything hashed out there, then I'll add more connection feeds to, like, CQG, DX feed, things like that. Alrighty. What was it? 11:49. Yeah, I really wouldn't be trading, folks, to be quite honest. I really wouldn't be trading. All right. Uh, if you're new and you haven't traded FOMC, for one, I wouldn't trade it. Second of all, you'll understand that a lot of times I didn't think. I mean, I'll be honest. I didn't think I would be doing. And I only I did like one mini. I mean, yeah. When I switched to micros, it could have been like a $1,000 day on account 27 if I would have just stuck with the minis. But it's FOMC day, and I just really I got green. And I'm like, man, I just don't like today. I really don't want to do anything. And that's why I just switched to micros. I'm like, yeah, let's just keep trading. And man, it would have been a good day. But I don't care. Friday's Friday. I'll trade Friday. Tomorrow I won't be on. I gotta go do something. So I won't be on. We're breaking the lows again, are we? Are we breaking the lows again? What are we doing, folks? Whoop. Blam. Looks like they breaking the lows again. Look at that volume kicking in, man. Look at that volume kicking in. If you want to go short on this, okay, you got an inside bar. If you want to go short on this, and let's say you go short on this inside bar and you get a spike down like this, you might want to go ahead and protect your account and move to a break even. You got an inside doji. Uh, yeah, you got 50 sell. We got a nice little dump. You might want to be moving your stop up to about right up in here. If you lose that 50 right there, if you take out that 50 single order seller, I'd be moving. Protect the profits, man. Be moving, move it up to about right there. Get you up about 10 points and be done. You got another inside bar. We could get a break of that, man. Uh, this is the kind of stuff you do, man. This is why my drawdown is as low as it is because I'm not looking to get this whole move. Okay? I'm not looking to get the whole move. Are we going to be breaking the lows? Well, we had a sell and bounce. We had a little run up here. Okay, we had a nice big run. We had a nice big huge sell and bounce. We had a 30 single order seller. You had an inside bar right here. A break at that inside bar. Maybe you put your stop right there at the inside bar. Don't be taking a full stop out if not needed. We break that, and look what happened when we broke that. Look what happened when we broke that inside bar right there. When you enter here, when you enter there, you immediately got green for about 5-6 points. Immediately. Maybe you peel some off and move to a break even. And then you just immediately, not immediately, but then you got 20 points. Okay. That's how you take extremely low drawdown. Put the odds in your favor. Go with the momentum. And if you get stopped out, no big deal. Who cares? Move on. Really? Who cares? This is how it's done. And when you see crap like this, when you let's say you got in here, okay? Okay, take some profits right here because you got inside bar and you're breaking up above that. Okay, you might want to take some profits. We had a little micro pullback, and then we broke that area and we moved back down again. Maybe this area right here, you're completely out. Where you really need to be completely out, right here, because we closed above it. We're trading strong up above. You're getting ready to get back all your daggone profits. So you really need to be out right here. Okay. Maybe you can hold on for more right here. Maybe. But once you start seeing this, you really got to think twice about getting out. Or you really got to think twice about standing. I don't know. But you know what I mean. Just get out. Just take your daggone profits and move on, folks. I mean, how hard can it be? How hard can it be to click the button and get green? Yeah. Hmm. Man, that is just tempting, but I can't do it. Just let the stinking thing go, man. Ah, just let the stinking thing go. We could break and take out those sellers right there. We could break and take out these sellers. That is very interesting, man. That I was looking at the chat of the company I'm going to be contracting with. Oh man, this would have been a good one, man. This would have been a good one. About 10 points easily. Yeah. You gotta close above that moving average right there. It's still sloping down. You gotta close above that moving average. You're gonna get ready to squeeze the crap out of those shorts right there, man. That would have been a very good one, man. Oh well. Uh oh well. Pass. 12 o'clock. Move on. Yeah, the reason I'm saying it could have been a really good one is because 27,500. Look at this. You've got these shorts right here. You got these sellers right here. Okay. You got these sellers right here. You got these sellers right here. th- They're getting rewarded a little bit. Then you had more, like three more pile on. Then we closed above right here. These right here are looking to get squeezed. That's what I'm thinking. Okay, that's what I'm thinking. Could happen, could not. I don't care. But then I come over here and then I'm like, okay, we got a buy and bounce right here. We got a separation of moving averages. We're closing above. We're getting ready to squeeze these shorts right here. So I'm thinking, okay, maybe you get in right here. You immediately got green. And when you're right up here, when you get like a move like that, and you get a move like this, and you get a big huge candle like that, and you see some inside bars like this, cut your stinking profit. What's wrong with her? All right. Okay. Okay. Is that tuna fish still any good? You have to look that up. I don't know. I have to look it up. Okay. Yeah. Hold on. Hey, Janlin. Hold on. I got to put myself on mute. All righty. All right. Yeah, that's fine. That's a lot. Two, I guess. Because a fourth day, probably not. All righty. Yeah, we could get some movement before FOMC. Yeah, it usually can move. I've just been, hey, after 11:45, if I'm green, I'm done. Okay? I'm done. That's just the way it is. For me, I just don't keep pushing it, man. I mean, look at the three accounts here that I'm working on. 971, 782, 695. Okay, so the profits are good, man. I mean, that's just the way it is. I just I wasn't able to trade yesterday. You know, if I could actually focus on this really 100% full time, which I'm, man, I am hoping, what I'm thinking, this is what I'm thinking. Possibly in about 4 to 6 months, I'll be able to be streaming full time. That's what I'm thinking. It really depends on how many people I can, as far as for advertising, because the contractor I'm going to be doing work for, uh, I'm going to take some of that money and then spend it on advertising to get the channel really cranked out. Okay, like I want to have at least a few hundred people a day. Man, I thought for sure. Look at this. I thought for sure they'd be squeezing them shorts out right there. These shorts right here, man. I thought they'd be squeezing them out because you had all these buyers right here. I mean, previously you had some, you had some shorties there, but I thought for sure we'd be squeezing them out with the close above here and we'd be running up, but we're not. We're still moving down. So be careful about taking longs. Be nice. FOMC meeting days are weird. All right, let me read this real quick. Uh, contract is successfully secured. Okay. Um, this company is not hiring me to sling code. They're hiring me as a contractor for technical. Okay. Oh well, I can always sling code on my personal projects. The closer we get to 2 o'clock, the more you need to be aware that your odds are really not going to be in working. If that makes any sense. Um, how can I explain this? So the type of trading I do, okay, here's the thing. The type of trading I do, first off, the 1 minute ATR. Okay, this type of trading that I do, if let's say the 1 minute ATR is like 60, 70, 60 to 60 ATR or something like that, or like 50, 50, 60, 70 ATR. Normally, that's not going to work all that good. Okay, because I have back tested this for over 1,000 trades for months in different regimes. Okay, market regimes, and the sweet spot is between 15 and 30. Is the sweet spot. 'Cause you're not looking to get, like, home runs all the time, okay? You're looking to get base hits, put the odds in your favor, go with the momentum, and put the and get green and have a low drawdown. Make a little bit of profit, move your remaining contracts to break even, and then manage the trade. So, also news environments. This strategy is not that good. Because these institutions are going to be shuffling money around left and right, opening and closing positions. So you have to know when to trade and when not to trade. breaking of those again. Uh, so, okay, if you got in a trade like that, I'd be selling something right there, that inside bar, and we're breaking it. Yeah. See, you see what I'm talking about? The closer you get to this FOMC meeting, it's just odds are not going to be in your favor. Um, I say you got a sell and bounce right here. You got this little inside bar right here, but we didn't break it. We actually closed. We actually traded above it, so that's like no. You got sell and bounce. We're moving down, so maybe you can sell here, short it here. Once you get this big pop within the first 10 seconds, go ahead and sell some contracts, move to a break even. Once you see this this little inside bar right here, little spinning top inside bar, just close out the trade right there. Just take your small profits. Take like 6, 7 points. Be done. Okay? That's just the way it is. I mean, 6 points. Who cares? It's $120. Okay, no big deal. 2-3 contracts would be making $200-300. Okay? Just consistently making the base hits. And here's the thing. Let's say you take this strategy and you're not able to make money, but yet you're break even. That's actually a good thing because you're learning. And not every day is going to be profitable. There are going to be some days where this just ain't going to work for you. It ain't going to work for me. It's just the way it is. All right. I'm trying to eat lunch. Well, hopefully this trade makes sense to you. Where you had a sell imbalance. Yeah, you might have been moving down on the 1 minute, but you had an inside bar right here. Okay. You didn't break it, so you didn't get in when you started trading above it. So that's you just scratch that trade. You don't enter it. So then you get in here, you short here. Okay. You put your stop up here. Once you get a spike down, I would seriously move to a break even. Once you get a spike down, I'd probably move my stop up. And once you see this inside bar right here and you start trading above it on this candle, then just cut the trade and take your like 10 point profit. Okay. This is just the way it is. You're putting the odds in your favor. That's why when I brought up my trade stats, where my drawdown is extremely low, is because of stuff like this. Okay. I'm looking to get into trades where I'm immediately green so I can protect the capital that I'm trading with. And this style trading is not for everybody. It's not for those that cannot. This style of trading that I do is not for people that want to hem haw around and be like, well, I need this, I need that. Oh, I don't know about this. It's for people that can make decisions within a second. Because you got to think, this trade right here, you're in. So, and this is a 5-second chart. So within 10 seconds, you're already 10 points. You got a spinning top right here, a little doji, a little spinning top candle. You need to make the decision like, oh, we didn't break that low right there. We're not breaking that low. We're not even going down on a wick to try to break the low. I need to think about getting out. This ain't for somebody that'd be like, well, I'm going to see if it runs. Mm-mm. Monkey see banana, monkey better take that banana. Now this one, man, that's hard to take just because, for one, we're at 27,420. We're down below down here. We're consolidating, okay? You're consolidating on that 5-second. You got a buying balance with the wick up here. You close right at the buying balance. You got the moving averages right there that are still separated. That's a hard trade to take right there, okay? Hard trade to take. And if you do decide to take it, which is not a valid trade, it's like a B setup at that. If you do decide to take it, a buying balance right here, and you get in here, you better put your stop right here, man. Don't be putting away down here. And when you start seeing this pop, you better start trailing it, man, and just get out. You got to be careful with stuff like this. This right here, I want to see a pop. Because right now, if I was in this trade, I'd be moving to a break even right now. Right now. We've already ran quite far. And that's the second signal. Boom. I'd be, are you kidding me? Take are you kidding me? When you see, trying to get to the keyboard. When you see a seller, and we close above, we have a run up, you got a little pullback right there. The sell volume is low, and you get in here, and you see pop, 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 pop. You better think, you better tighten that stop up to right here, man. And when you get a pop like this, you better be peeling some off. Okay, I am not joking. Because if you don't, you get in here and you don't start taking some off right here. I mean, come on, what are you waiting for? Come on, man. Where? I'm trying to eat and do this. I swear I can't chew bubblegum and walk. I swear I can't. If you make 25 points, 25, 30 points, and you ain't taking your freaking profits, I don't know what's wrong with you. I really don't. You know, I just don't understand I don't understand how people can see a pop like this and not peel some off. Or at least tighten up the stop if you're trading one contract, like at least half of that. I just don't understand that. Because so many people be like, oh, 25 pop. Oh, wow, we're going to be running 50, 100 points. And then all of a sudden they give it all back. It's just, man. And see what I talk about when you got one signal and two signals, your third signal, and you kind of move down. Your first and second signals are usually good, but you got to be careful when you ran this far already. You got you got to be aware to not be triple dipping. Okay. Alrighty. Yeah. All right. Hey, folks. All right. I had me some. I don't know if y'all like this, but for lunch, I had tuna fish sandwich. Had two of them. You take tuna fish sandwich. Oh, and the wife puts the hard boiled eggs in there and stuff like that. So tuna fish sandwich, and then you toast the bread on the tuna fish sandwich. It's really good. It's really good. Uh, Yeah, yeah. So when you see stuff like this doesn't happen very often, folks. But when you see this, oh boy, you hold your britches when you get a seller right there, and we close above it. You got 25 single order sell contracts, and you close above it, and you got a buy imbalance. Oh yeah, that is a recipe for a banger. Um, Actually, if you got in that trade and let's say you held it up to here, that's about 35 points. Holy smokers. I didn't think we'd be doing this today, man. But I guess we are. Um, well, now you decide to squeeze the shorts at lunchtime. You just what? Why couldn't you do that crap at 11 o'clock? Huh? Huh? You want to do it at 12:30? No, well, goes the well. Oh, the way out. Now, see stuff like this, and see, this is why this trading strategy is only for those that are pretty disciplined and can make decisions pretty quickly. Okay, you got a buy and bounce right here. We got a massive run up. Okay, so let's say you buy here, and you see this little inside bar right here. Okay, and you start getting above it, but then you start getting below it right here. Uh, just take your stinking break even, man. Okay, I don't care. Just take the break even because then you get in on this trade right here. And then what happens with this one? Well, you make yourself about 10, 12 points. Okay. All right. So that's so many people get in here and want to take profits way up here. And they can't for some reason. I don't know why. But the majority of traders cannot get in here and see the weakness right here and then just get the heck out for like 1 or 2 points. Like, I just don't understand this. Especially if you're trading a 5-second chart. Holy smokes. You better make a decision quick, folks. Don't be pissing around because before you know it, you're down 20 points and you're like, oh, what just happened? Well, you got your face ripped off. That's what happened. You couldn't make a decision. That's why trading hotkeys. Let me turn this off so I'm not tempted to do anything stupid. Uh, and give back profits. I mean that's just the way it is. This money here was made in the morning, then I'm done. Okay, I move on. I move on. Make your money in the morning. Move on. I didn't know they would squeeze these little turds, these little short turds. The little short turds, they got squeezed out a little bit. Now they come pounding back in. The shorts come pounding back in. Why? Well, because they were here earlier, I guess. FOMC meeting day, you might want to just kind of take it easy. Be like me, man. Take it easy. Make your money in the morning. Just be done. There's the account is going nowhere. Okay, it ain't going to go anywhere. It's going to be there for tomorrow. It's not like you got an account where you got to pass it that day. Okay, I mean, the account is going nowhere. The market really ain't going to the market is not going to just like poof disappear. You're always tomorrow's another day, okay? Except for like on Friday and then the next day Saturday, so you can't obviously you can't trade, so you got to wait till Monday. But just oh, hold on, I got my uh all right, hold on. I got to get back with this person. Uh I'm talking with the person that is hiring me as a contractor for technical reasons. Uh, okay, good. Um, all right. Someone's hiring me for as a technical advisor role, not as a code slinger. I'm usually a code slinger. I've been slinging code for, I don't know, over 15 years. Um, and now someone wants to hire me as a contractor for as a technical advisor. They've got their code slingers. They just want me to be a technical advisor for new project and actually manage the developers, which I'm going to take because, well, it's money. I mean, good money. So, which is going to help the channel out because then I'll probably be able to spend like $1,000 a month to advertise the channel, and that will really grow it. So, yeah, okay. Um, okay. We got a meeting at 6 p.m. tonight. Okay. Ah, okay. What are we doing here? Okay, so if you take this buy right here, you got to understand that if you do not break, you got inside bar. If you hold off of this is not good. I don't like this. The volume is a little lower because it's a micro pullback. The volume is lower than these two bars right here. Let me, like we had a run up, okay, and the volume's right here. You had a pullback here. The volume is kind of lower, which is nice. Okay, it's lower volume. Maybe if you got in here and you see a little inside bar right there and you're not able to break it, you got to make a decision. For me, I'd probably just cut the trade. Okay, for me, I'd probably get in here. We come up here. I don't know how much we move up, like 5 points. Okay, you get an inside bar. I'd be like, okay, break even. You got to break even. It took me out, so I didn't lose anything. Okay, maybe you come down here. You close right here. You see this bar right here. The volume's kind of dried up. Maybe you get a decision to get back in here, and then you get a little pop, and then you have to get back out. So it's kind of like you're getting chopped up a little bit. Okay. So, but you got to understand the context of where you're at. Okay. The 1 minute, you're right here, and the 1 minute is sloping down. So the odds of a 5 second chart when the 1 minute is like this, you've deviated and you're bouncing back up. I mean, you're looking for a move up here when the moving average is sloping down. That's kind of hard to do. Why do that when you should be looking for the trades to be going long up in here when the momentum is upwards? And when you're taking very little heat when you like get in here, because this is what I'm looking for. This is why I trade a 5 second chart. I'll explain why I trade a 5 second chart and you'll understand why. Because when I'm looking at a 1 minute and I see a buy imbalance, I'm not looking to wait another minute or two and have the thing way up here. What I'm looking at is a 5 second chart and try to get in here and try to take the profits up here and get a slice of the pie, okay, as we're moving upwards, okay? That's my mentality, okay? And you can do it. Like, if you're a stop out, if you're risking like $200, but yet you're okay with risking $600, you can go in 3 contracts, man. You can go in heavy, okay? That's totally fine. You can totally fine. I mean, look at my drawdown today. Out of 10 trades, my drawdown was $25. That's ridiculous, man. That's the lowest I've seen in quite some time. Win rate of 80%, which was quite good today. I must have been on top of my game, or very lucky. But that's where I'm looking. I'm looking to get a slice of the pie right here because the momentum's already up. Okay? Momentum's already up. When you're like this, do you really think the odds are in your favor right here? I mean, you're at 550, 530, like right up in here is starting to flatline. The odds are really not in your favor. So why be taking stuff like this? Okay? As a new trader, you need to be looking not to be buy here, sell here. Leave that for the gurus later on tonight. You're looking to get a slice of the pie up in here. Maybe you get trade here, trade here, trade here. Okay, get about 2 3 trades. Okay, that's what you're looking to do. If you're the type of person that wants to buy the lows and sell the highs and full port and do that kind of stuff, then this channel is not for you. I'm just being honest. I'm not that type of trader. This is not for you. If you're the type of trader that wants to learn how to scalp and put the odds in your favor and take very little heat, then great. Stay tuned. Yeah, so that's what I have. That is what I have. And sometimes you might have to wait to be trading inside here. Maybe you're looking for shorts right here, looking for longs up in here. Maybe you have to wait between here to here. You might not get any trades. Maybe you have to wait for 30 minutes, an hour. Who cares? The market will reward people that are patient. It will slaughter the impatient trader. It will. It will. Man, it will chew you up and spit you out. All right, here, let me start my tea. I'll be right back. All right, I think I can keep streaming because the person that's hiring me as a contractor wants to talk at 6 p.m. So that's good. I'll keep going. Well, keep going for FOMC. It's kind of weird. Yeah. All right. Oh, we're going off the screen, folks. Forgot to recenter. We're going off the stream. Forgot to recenter. Oh, blah, blah, blah. You see, I made my money in the morning and I'm a done. Make my money in the morning. I'm a done. I make my money in the morning and I'm done. Boom, 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 boom. Wah, ba, ba, da, da, da. Make your money in the morning. 9:45, 11:45. Make your money and be done for the day. How would you like to be able to work 3 hours, 3 hours a day, Monday through Friday, 3 hours a day, only work in the mornings for 3 hours, and make an average of $500 a day? I mean, the market gives you the opportunity to do that. Seriously, let's think about this. This money right here was made in the morning, okay? Actually, I did like 2 or 3 minis. What did I do? I think I did like two or three mini trades, made like $600, and then I switched over to micros. Okay, no big deal. But how would you like to work 3 hours in the morning, 9 o'clock to 12 o'clock, just 3 hours? Okay, because 9 o'clock, you really need to be at your desk at 8:30. Okay, I'm just being honest. You really need to be at your desk at 8:30. Okay, start looking at what went on the overnight session. Start looking at the news. Start finding out what the lunatic world leaders did overnight. Okay, find out what's going on and start looking. Just look. Have your cup of coffee and look at the price action. See what's going on. Then at 9:30, sit on your hands and wait. Now, I mean, okay, the first 3 minutes, within 3 minutes, I took a trade and I was good. And then I flipped to the other account, took a trade and I was good. Okay, all right. But I'm a little bit more experienced. But I have to go get the tea. I'll be right back. I didn't even look to see how many jobs are out there yet. So, okay, what we got? We got about an hour. Okay, we got about an hour. Um, the market's going to go a little crazy. The market could go a little crazy. That's probably why we had this little run up. You know, 2 o'clock, FOMC. And let me think. Let me think here. It's going to be nothing. No change. Whatever. The rate's going to stay the same. Blah, blah, blah. I mean, it is what it is. Uh, uh, 2 o'clock. US. Now, if you actually took that trade right there, you might. Yeah. This is why you put your stops in. This is why you put your break evens in, especially during FOMC day. Ooh, boy. Look at it going crazy, man. It's a going crazy. Like, if you actually took that trade right there, kind of hard to take because you're like that. You tried it here and it failed. You tried it here. You got paid a little bit, maybe. Maybe if you got in there, you got about 3 points. I mean, I just wouldn't be trading. Just don't trade. Like I said, make your money in the morning and move on. Be like me. Make your money in the morning and move on. Okay, $600 day. Okay, that's good. It wasn't $1,000 or $2,000 day. That's fine. Okay, not every day is going to be like that. Okay, that's just the way it is. Not every day is going to be like that. But as you can see on stream, I am consistent. So, and that's really all that matters. Okay, you don't need to be making like $5,000 in a day. Could I do it? Yes. Okay, when the war's over and we're slinging around 3 to 5 bennies, then yeah, okay, we can do that. But she's a piece of work. Oh my word, Kelsey. Ugh. Okay. All right. Let me have my tea. All righty. Let's see what we got here. The cumulative. Okay, this this right here, this little box right here is a cumulative 5 minute delta. Man, I got a lot of work. I gotta get this version 1.5 out. Man, my thumb is really getting me. Yeah, I gotta get this version 1.5 out. I also gotta do an update. I think Friday I'll be able to do what Rhythmic wants me to do. Ah, little trap sellers right there. How you doing there, trap sellers? Oh, you're getting oh. So action. A little action. Uh-huh. Uh-huh. Mm-hmm. Right there. We're up here. Right here. We're up here with the buy and balance. What did I say earlier about that? I mean, you could have got yourself a couple $100. It ain't much. But, oh, are we going to run to the VWAP? You going to the New York VWAP? Oh, you got some aggregated buyers there that are trying to push it down, man. Squeeze them little turds out. Go back up to the New York VWAPer. I know people call it the VWAP, the VWAP, and all everything. I call it the VWAPer. I call it the Whopper. But that's like I said earlier. We had a trade like that earlier. Yeah, seller, and we closed above here with a buy and bounce. That's just a recipe to go up. Get yourself about 10 points and be good to go, man. You know? If you can make yourself 10 points in a matter of 5, 10, 15 seconds, within 15 to 20 seconds, and you make yourself 10 points, I mean, my word. What else do you want? I mean, I'm being serious. But that's just my strategy, man. Okay, that's just me. All right, that's just me. Some people trade off of 1 minute, 5 minute. Not me. I do 5 seconds. As a 5-second trader, I need the market to crap or get off the pot. You know, some people think I'm a nutcase for doing 5 seconds. That's fine, man. That's fine. You think it all you want. Monday was a couple $1,000. Today was 600. All in the matter of 2 hours, folks. In a matter of 2 hours, $600, I'm done. So yeah, Monday was like $2,000, man. Actually, it was 1,900. Okay, but $2,000 day Monday. Hey, all in a matter of a couple hours. That's why I say, you know, you really have to be at the desk, like at 8:30. You got to be at the desk at 8:30. You got to find out what the nutbag world leaders have done overnight. You got to find out, you know, what's going on, what's moving. You know, you just can't roll out of bed at 9:25 and go trade at 9:30. Come on. Treat it as a business. Yep, we're going up to the V Whopper. And here's the thing. Like I said, put the odds in your favor. Right? We're moving up, so you should be looking for longs. What do we have here? Boom. What do we have here? That's not a trade. Why? Because we closed below it. Look what we have here. We didn't really break that area, but maybe you got stopped out. I don't know. Maybe you got out right here. I don't know. Look at this one. Buy. Get in here. I mean, when you get like 8, 10 points, take some off the table. Okay. What's wrong with getting in here, taking some money right here, and putting your stop right here? Okay. Now you're in a free trade. Okay. Now you're up like 20 points. Okay. So this is the kind of stuff that you really need to think about when you're trading. A professional trader thinks about putting the odds in their favor and managing risk. You're not a trader, you are a risk manager. Okay? So you get in here, you get a nice little pop. Your risk is like 5 points and you just made 10. Why the heck can't you just go ahead, sell some, and then manage the risk and maybe keep your stop down here? Okay. You've already taken a little bit of profits right here at 10 points. Okay. You got yourself a little bit more. You got a little tail right there. Okay. It's starting to roll over. Maybe you get out right here and take the rest of it off. Okay. You need to manage the risk. Well, right now we got about an hour before FOMC. So you better be careful. That's all I gotta say. You better be careful, man. Or woman. Or entity. I'll just call you entity. Okay. I need to be politically correct. We're not human beings no more. We're not man, woman, wherever you want to be. We're all entities. Okay. I got to be politically correct. We don't know anything anymore. Everybody is an entity. So, but I'm being okay, let's come back to reality. But I'm being real about this. Okay, this is not a trade. Why? Because we closed below it. Okay, and also look at the moving averages pinching right there. No, look at the look at the 1 minute. It took the blue pill and was going straight up. Okay, look at this right here. Look at the moving averages separating. They're diverging. They're diverging. So why not get in here, take a little bit off here, put your stop right there. Okay, you're in a decent trade. You've already, let's say if you sold 10 points up here and your stop's at 5 points, okay? Because that's what it was. And then let's say you sell a contract here and you make yourself money and then you get a stop out. Well, you just made $100. Okay, big deal. Who cares? Because you don't know if it's going to dump right down here. Okay, you don't know. That's why you're not a trader. That's why you're a risk manager. You're not a trader, you're a probability executor. So putting the probabilities in your favor on this trade's good. Why? Well, because we have a buying balance and we closed above it. That's 3 levels. On a 5-second chart, that's 3 levels. 4 times more buyers than sellers. Minimum zone of 8. Oh, wow, I have 8. Why is it not 12? Oh, let's go back to 8. Who cares? Normally I have 12. I think it was FOMC and I just wanted to do 8. Okay, 8. On a 5-second chart. Okay. This is not a sell. Why? We have an inside bar, but did we break? No. We broke up. No trade. Sell imbalance. We closed below. Is that a trade? No. Look at the move. Look at the moving averages for one thing. We're in a big fat consolidation. I just wait. I just wait. Just wait until the market breaks up or breaks down. You don't always need to be in a trade. Some people come to here, when I had it just all public, anybody can make a comment. You'd have people coming in here making stupid comments about they were here for 5 minutes and they're like, "Are you taking any trade?" I'm like, "Nothing's setting up. Are you going long? You going short? You going long? Are we long? Are we short?" I'm like, maybe if you calm down and stick around for about a week, you might be able to get green. I mean, we're pretty close to the VWAP. I mean, I haven't taken. I was done 11:45. I'm done. Okay. I make my money the first couple hours and I'm done. I don't piss around. All right, VWAP. You're right up against the VWAP. It's a dangerous area. You can't break the high of that. If you don't break the high of that and keep moving up, like right now, you need to be moving to a break even. Okay, I'm being dead serious. If you took that trade, yeah. Okay. We ran quite far. Okay. We ran quite far. We broke the consolidation area. Normally, it'll break up and then pull back down to it. Okay, and then we might close above the VWAP or right at it or around it. We don't know. Okay. I mean, we're pretty close to the 2 o'clock FOMC, so I'd be careful. we've deviated from the 1 minute moving average pretty big. The previous 1 minute's a spinning top. You know, so we've had some pretty decent I mean, we had some really decent trades in the morning. Uh, so we got 2 minutes. We could close above the VWAPer. So again, all right. Let's go over this. I don't trade afternoons on FOMC. As you see, I traded it in the morning, made $600 for the first couple hours on a few trades, and I'm done. Because I'm not going to risk it because the market kind of gets erratic. On FOMC, you get closer to it, it kind of will get erratic. I'm not going to risk it. Okay. But let's go ahead and take a look at this. We got a nice little run up, little 3-bar pattern right here. You see that run up right there, the little 3-bar pattern? And all of a sudden, you got a little micro pullback, a little inside bar right there. Boom. We start breaking that inside bar right there. And look at the volume on that pullback right there. The inside bar, the volume is like right here. It's lower than that. Okay, it's lower than this. We definitely didn't break the 50% mark on this run up. So maybe you get in here, right on here on that break. Okay. Maybe you come up here and you get stuff like 5 points. You know, that's just, you have no buying balance or anything. You don't have a buying balance like you did here. Maybe you got a little bit here. Okay, that's fine. And you're putting your stop down at the below the buying balance. You're not putting your stop. See, here's the thing, folks. You're not getting in here and then putting your stop down here. If you lose this buying balance, where there's 4 times more buyers than sellers, if you lose that area, more than likely you're going down. So why take a full stop out? That's just kind of idiotic in my opinion. Okay. But again, my opinion. Okay. You get a buying balance here. Maybe you can get a break of this, and maybe you get a nice little run, and you come up here and get yourself 5 points. Okay. 5 points. Yeah. 5, 10 points. I mean, you saw me. I mean, how much did I get today? Something like 10, 15. It was like 13 points. It was 13 points on a couple of trades. Okay, so I ended up, $600. Actually, it was a little over 600, like 616, something like that. That was like $600. That's like 30 points. Okay, I get 30 points in the morning. I'm good. I'm done. Sometimes I can get 50 or 100 points. Okay, no big deal. First couple hours, like I always say, if you can be consistent with 20 to 30 points in the morning between your wins and losses, you're good. Don't be trading in the afternoon giving the crap back. So we closed above the VWAPer. The VWAPer. All right, we closed above the VWAP. We got 228 aggregated buyer on the previous 5 minute. Everything's looking good. Now, here's the thing that I like to look at on the 5 minute, okay? And I'll look at this. I don't say this all the time just because it's kind of like, I don't know. I'm not used to streaming. I'm used to just listening to music and jamming the music and trading myself. But the way I look at the 5 minute and I look at the volume, okay? The volume here, we had a nice little inside bar right there on the 5-minute as we ran up. You know, the shorts, boom, got trapped. Shorts, they got the trapped. Okay, we start breaking that area right there on that little inside bar right there, and look what happened. Look what happened. Boom, you can trade the same thing on a longer time frame. 5 minute if you want. I don't care. 1 minute. Okay, I just trade off of 5 second. Okay, but the way I look at a 5 minute is if we lose this volume area right here, we have a low volume area right here. So more than likely, we're going to go boom right down here, and we're going to get caught right here on this high volume area. Look where the V Whopper was. The V Whopper, it was right there, 683. It was right there where all that volume is. Okay, boom, where all that volume is. I look at it this way. On the current 5 minute, we got big volume right here. If we lose this volume area right here, this is low volume. More than likely, we'll come back down and kiss the V Whopper. Yepper. That's just my opinion, though. But that's the way I look at things. You might look at it differently. Perfectly fine. I'm glad people have disagreements in the market. That's what makes the market move. Somebody thinks it's going up, the other person thinks it's going down. Now we got movement. We actually need more people to think, but you know what I mean. You actually need more buyers and sellers to go up, more sellers than buyers to go down, but you know what I mean. Oh, so let's take a look at this. If we start losing this volume area right here, are we going to go down to this area right here pretty quickly? Because this was a low volume area, lack of interest right here. Okay, a lack of interest. We're below all this big volume right here, man. If we want to move up, we need to be up in here above the volume. They need to start lifting the offer and stacking the bids. What I mean by that, they need to start pushing it up. Start eating through those offers and stacking the bids, which means adding to the books. Okay, and lifting the offer just means, well, they are chewing through the people that have the sell orders in. Okay, so we closed. Now, if we lose this area right here, okay, what I'm thinking, since this is a low volume area, we'll just come right down to the V Whopper and kiss it and possibly bounce off of it. Who knows? Oh, you got some sellers in there. Oh, you got some good sellers up in there, man. Are they going to get trapped is the question. They could, because look at these idiots right here. They got trapped and they got squeezed out. This is a nice little battle going on, folks. It's 120. My advice, if you are green, you need to just call it a day, okay? There's no need to give it back. But I can make more with the volatility. Yeah, you could also lose it all. If you have a plan to trade the news, go for it. I don't. I just let the dust settle, man. Okay? I will trade less and make more money. I don't care. I don't need to trade every day. That's the whole thing. I don't need to trade every day. It's very rare that I come in and I don't ever take a trade. Okay? It's very rare. Okay? I mean, I was done today at 11:45. So I was pretty much done. Okay, what we have here. We got to run up. Look at the volume on this right here. Look at the volume and that micro pullback right there. And we're kind of, and it's low. Okay. You better be moving to a break even. So we got to run up. We got a little inside bar right here on the 5-second chart. Okay, we're breaking that. Look at the volume on the run up. These 3 bars right here. Look at the volume, how low it is on that micro pullback right there. Okay? So when you get in and you come up here and you got like 5, 6 points, lock it into a break even. You come up here and you get yourself about 8 points. You're stalling. You got a big wick right there. And you close right here. Just take your stinking $100 and move on, man. Don't be looking for your home runs all the time. Okay, that's a big wick right there, man. That's a big wick right there. And if you're like me, the only wick you like is a John Wick. Okay? This is scalping at its finest. Why? Well, because we were at 1321. Where's 1321? 1321. Where are you at, 1321? 1321 is right here. Look what we were at. We were at a green candle. Okay? The market's moving up. The odds are in your favor. So take it. Take it. You don't know. You could have gotten the 50 pointer, but you didn't. You got $100. Now move on. 2-3 minutes, you got $300. Just move on. Okay, be happy with what the market gives you. You need to trade. Don't be listening to these daggone gurus. Don't be listening to these stupid gurus, man. I'm telling you, they're giving you regurgitated BS that they learned from someone else. They don't know what the hell they're doing. They got rented Airbnb houses and rented Lamborghinis. The market's telling you it's strong right here. Market's telling you it's strong. You got a big old wick right there. The market's telling you, well, I'm not strong anymore. Okay, so you get in here and your stop's down here. So if you got in there and your stop is right there at about 5 points and you've already made yourself about 8 points, okay, that's good to go. Okay. And look what you did. Within 10 to 15 seconds, you just make a quick 5, 8 points. Okay, who cares? Move on. Remember what I just said earlier. Okay, look at this. Remember what I said about this area right here. Okay? Remember what I said about a low volume area? A lack of interest right here. Why? Because it's low volume. This is high volume. So when we lose this area, look what happened. We ran down pretty quickly past that low volume area, and look where we stopped. Right there at the high volume area. This is not a crystal ball that I had right here or right here. Okay. That's why I made the call. Boom. Lack of interest. Look where we're stopping. Right at the VWAP, where all the volume is. Okay. Like I said, it's just a lack of interest right here. Okay. Now that we broke that area, well, this area is no more. We have to use this area. These are just things that you'll get through time and experience. You'll just get through time and experience. Okay? I mean, if you took a short like that and you come down here, it makes up about 15 points. Makes up by a quick 300 buckers. 300 buckers. 300 buckers. I mean, it's not a crystal ball. It's just I've been trading this crap for over 10 years. This is not an A plus setup, probably a C. Okay, not even a trade, to be quite honest. Look at this. We closed like like we didn't close up here on that buy and balance. We closed at the low of it. Man, I just don't like that. I like to have a buy and balance that closes above it strong. And we were below the moving average. Look at the moving average on the 1 minute. The 5 minute and the 1 minute is context, people. Context. Okay. Now, what's going to happen with this lack of volume area? A big volume right there, right? You can do the same thing. Look at the volume profile right here. Look at the volume profile right there. Okay. We might run through it pretty quickly. We might not. It's just you got to be aware of those areas. I normally don't trade those trade stuff like that. I just like looking at it, and I like really seeing where lack of interest is. Because if we're moving down, and I see a big volume area like that, and the 1 minute and the 5 seconds setting up for a nice long, you can be like, okay, this could be support. Okay, you gotta use context of where you're at. If you're in a thinly traded volume on a 5 minute, okay, on a thinly traded volume on a 5 minute, okay, let me try to find one. Mm, okay, like right here. Okay, thinly traded volume. Why is this not working? Okay, okay, you got to sell right here. Okay, you got to sell right here. We closed below it. You got a sell right there with the wick. I'd be putting my stop right here, basically to a break even. Just manage the trade and see if you can get yourself a few more pointers. Okay. Well, it looks like you are. I mean, it's just shit like this that just kind of, I don't know. It's not a crystal ball. I swear, I don't have a crystal ball. It's just years of experience of understanding what's going on. And plus, I've been trading the NQ, this nutcase of an instrument for like 10 years. "30 minutes, FOMC, 30-minute warning." I mean, look at this. Seriously, man. I don't care what the market's doing. Um, Low volume area right there. We came here to where the higher volume was. Look where we stopped. Start building out volume right there. Low volume area, and we traded through right there. We traded through. Where do we start? Like 670? Where are we over here at 670? 670 was right here. And look at this. We just came right back down to where 650 was. Where's 650? 650 is right here. Oh, look at that. Right there where that volume. It's just not, it's not a crystal ball right there. Boom, 650 where that volume was. It's not a crystal ball. It's just understanding where the buyers and sellers are. You got to understand where the buyers and sellers are. That's all. I mean, if you take a trade like that, run up and a little micro pullback right there, and that volume kind of dried up right there, boom, and you get in here, Take a little bit of profits. Wow, because you're right here in the selling bunch where it just sold off. Take a little bit of profits. Leave yourself a runner. If you left yourself a runner, then you're probably up like 12 points, okay? Maybe you can come up here and get yourself a 25 pointer. Who knows? All I'm just saying is the odds are pretty good because in your favor for getting profitable, at least to a break even, because you've had a run up and you have a pullback. On that pullback, the moving averages are diverging with the micro pullback with low volume. So a break of that right there, you're looking for a pretty good run. I mean, you can got yourself 10 points, like $200, man. Okay. It's stuff like that. But you need to understand is if you get in here and you get this pop right here, just go ahead and maybe peel some off and move to a break even or whatever. But you got to understand, look at the context of where you're at. The 5 minutes, you're moving up. Okay, check. That's good. But the 1 minute, you're below that moving average right there. That's sloping downwards. Okay, this could be a pull, a run up and then a dump back down. You don't know. Okay, but you're just putting the odds in your favor. Okay, you had a nice little run, the volume right there. You got micro pullback. It came back to about half of this run, which is it's fine. It's fine. I mean, if it pulls back down to here, then no, it's not a good trade. It's just stuff like this. You don't have a buying imbalance, but it's just stuff like this with years of experience that you can be trading and stuff like this. That's all that is. And also, uh, like this right here, the low volume we just went over, we kind of shot down, had that trade right there. Okay, that's good. It's just little stuff like that. You just have to put things into context of the buyers and sellers. All right, it's 1:34. I mean, FOMC is 2 o'clock. The rate decision is 2 o'clock. I was done at 11:45. Okay, I make my money in the morning and I'm done. Okay, I'm done in the mornings because late afternoons that's when I usually either break even or give money back. That's just the way it is. Like I don't make any more, but then I might lose some. It's just the way it is. Late afternoons are not good for me. So that's why I focus on the first 2, 3 hours and then I'm done. So yeah, first 2, 3 hours and then I'm done. Like Monday. Well, yesterday I didn't trade. I was doing something. Like Monday, $2,000 days, first couple hours, I'm done. That's just the way it is. I'm done. First couple hours, I'm done. Uh, I'll look something up real quick. I don't know. Yeah, first 2 hours, I'm done. Okay, what is that? Sorry, I'm connected to my server trying to find. There we go. Okay, that's good. Um, Yeah, like this trade here. Okay, so like, uh, where are we at? Like we had a sell imbalance. Okay, they're diverging. We had a little pullback. It got pinned a little bit right there, but we closed above this sell imbalance. That's nice. So if you get in here, if you get in here and you're good for about 8 points, okay. Uh, when you get a rundown, lock it in, man. Okay, you will see me take a trade like this, and as soon as we get down to this area right here, I am moving to a break even. And as soon as we start trading above this area right here, I just cut the stinking trade. Okay, I don't care if I'm making 4 or 5 points. I move on. Some trades are going to work out, some won't. Okay, most of them, you know, I mean, I don't know. I was like a 80% win rate today, so it doesn't matter. It's kind of high for the day, but uh, for the week, for the past 2 days, I think I'm like at 62% win rate, something like that. So yeah. Yeah, just put the odds in your favor. That's all. And please adhere to your stops. That's why I use hotkeys, man. I do that Shift X, move to a stop to the break of the previous low in a 5 second. I just let it go, man. Don't be screwing with your stops. Uh, Next thing you know, you're screwing with your stops, losing money. Oh, like Monday, $2,000 day Monday. Here's the thing is, I think one account made like 700, and then I flipped to another account, made 700 on that one, roughly. I think it was a little over 700, but who cares? And then like the third account that I started trading, I was down 200, then 400, then 600. Then I made an awesome winner, and then I was up like $500 profit because I made like $1,000 trade, but then it was like an 800 or 800, I don't know, 800 or $1,000 trade, and then I was up like $500 profit. Okay, it's just the way it is. I had like 3 losers in a row. I didn't care. I'm like, all right, whatever. I'll get it done. Don't worry, I'll get it done. I'll get it done. Oh, you kind of. Well, that's actually pretty nice. Some people didn't stick around. They're using the monthly. Yeah. Okay, here's the thing. If you're going to get this add-on, I forgot what the monthly was. It's $20. Then is it 3 months? I can't remember. I think it's $45 for three or 4 months. I can't remember. It's been a while since I took a look at this. Okay. Yeah, 3 months. So a lot of people, what I've noticed is a lot of people are doing 1 month, $20. That's fine. Okay, that's fine. Do not. I mean, if you're going to spend $100, you better make sure you're going to be trading for a year. Okay, that's just me. Okay, if you're going to do that, just make sure you're trading. Okay, for at least a year. If you want to try it out, 1 to 3 months is great. Okay, 3 months. If you can swing $45 for 3 months, I can almost guarantee you, if you really focus and you use this, and you follow me for 3 months, if you're not profitable, then move on. I'm just being honest. Probably the trading strategy is not for you. You need maybe another strategy will be. I have no idea. Uh, Not everybody's going to be profitable with this. See, here's the thing. You well, I got some dude out trading me using my own thing, and the man's out trading me. He's passing like 150K accounts, $9,000 profits in a week. I mean, the dude's out trading me. Some people are going to take this add-on and out trade my ass. That one guy is. He's the one that needs to be streaming, not me. Let me keep writing the code. But yeah, so try it for 30 days, okay? Try it for 30 days. Do not be buying this add-on for a whole year, spending $100 if you're not going to be around for a year, okay? Because most traders are not going to be. I'm just being totally honest with you, and I'm being totally realistic with you. 95% of traders fail. So why do you think you're the 5%? I hate to be blunt about it, but this market, the financial industry of trading futures is nothing like stocks. Trading futures is a brutal, brutal game that most people cannot play consistently for a while. Okay. Now, it took me a while. Okay. I mean, I've been trading since micros. So before micros came out, before Top Step even came out, I was trading. Okay. But I was trading the minis. But I was also a software engineer where I had a 6-figure income. So blowing up $2,000-$3,000, yeah, I didn't like it because maybe that year I didn't take a vacation. I was just like, well, I'm going to save some money and open up another account. Maybe I blew $2,000 and be like, oh, okay, whatever, go back to the drawing board. 3 months later, all right, open another account, blow 2,000. After blowing I think it was around 10,000. I don't know. It wasn't over 10,000, but blowing like $10,000, I finally learned what the heck I was doing. And the main thing was risk management, man. That's the main thing. You got to have capital to trade. You really got to have capital to trade. That's why so many people come in here and be like, man, how can you just move to a break even and take a break even and then 10 seconds later get right back in the trade? Because I don't want the thing to dump on me. I have no problems taking a break even. Commissions aren't cheap with the fake prop firms. They really want to screw you, but that's beside the point. Like if you go with like a real broker or something, okay, not a real prop firm because you ain't trading with a real prop firm unless you good, like S&B Capital or somebody like that. But these fake prop firms, they're going to charge you. Yeah, whatever. Uh, yeah, yeah, but I blew like 8-10 grand of personal money. These fake prop firms were not around. Micros were not around. See, nowadays, people have it so easy nowadays. You've got micros. You can say screw the fake prop firms. You can trade micros. You can take $1,000. If you got $1,000, you can take $1,000, trade micros, and if you're disciplined enough to take your stops when you're supposed to, okay, lock in profits, move to break evens, manage to trade micros. Do not care about making money, just care about surviving. Okay? You can make it. You can eventually make it. But you do not trade real money until you can prove yourself on a demo account or a prop firm account. Yeah. Okay. Well, we got 10 minutes, 13 minutes, 13 minutes. OMC, 13 minutes. Oh boy, oh boy, oh boy, oh boy, oh boy. It's going to be fun. FOMC. FOMC rate statement. 2 o'clock. So, yeah, you really need to not trade. I'm not trading FOMC. I normally don't. If I trade FOMC, it will be actually it could be on one of these accounts. Here, let's try this. If you guys really want to trade FOMC, we could do account 32. Yeah, we could do account 32. Let's see what we're. I mean, I could do account 32. Account 32. Where's it? Where are you at? Right there. I don't want to trade these 3 accounts because I'm trying to get these 3 accounts to funded so I can have more funded accounts. If I trade this, I need to blank it out real quick before it comes up. There we go. I'll bring it back. Don't worry. I just need to get this. Okay, let me. Okay, go to positions. Okay, so we're going to trade account 32. If you want to trade FOMC, we can do that. Let's just do account 32 and we'll see where we're at. All right, we got about 1 minute. Nope, not trading micros. Trading minis account. FOMC. 150, 150, 150. Oh, I was wrong. Boy, got like 10 minutes. The heck was I thinking? I don't know. We got like 10 minutes. This is crazy. Okay. All righty. So got about 9 minutes. It is what it is. Got the B Whopper, just a flat line. Uh, account 32 took a little bit of a hit, so I just don't. I'll trade that if I'm going to trade it but these 3 accounts that I'm working on, I'm not going to be trading them just because I just don't want to get back any of the profits. I'm really trying to get them to these 3 accounts to funded so I can have more funded because I blew up a few of them trading during this conflict. All right, there's count 30. Nope, I don't want 28. I want 32. Yep. There we go. Okay. Let me put my chart trader and hotkey back on. I've got my chart trader and hotkey enabled. Normally, what you want to do with FOMC is be careful, because usually the first move could give it back. I would say wait, like just wait until the dust settles. Okay. Hmm. Already about 6 minutes. A little less than 6 minutes. Five minutes. And let me guess, it's not going to change. Boy, wouldn't that be something if they did a rate hike? Holy smokes. That would just, wow. Wouldn't that be something? You see right here, we got no participation in 4 minutes. Like all of a sudden, you got like buyers all over the place. Buyers, sellers, like bum, 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 bum. They're participating. You have some up in here. Then all of a sudden, 5, 10, 15, 20, 25, 30, 30, past 35 minutes, nothing as far as aggregated buy sell. That's telling you that you might want to just sit on your hands. Here's the thing, if it sells off, where do you know where the bottom? Where do you know where the bottom's at? You full port, you buy some contracts, yeah, you blow a count or you pass. Well, what type of skill set is that? Do, 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 do. Little absorption up there. We got about less than 2 minutes. You got less than 2 minutes, folks. You got 1 minute, 30 seconds. 1 minute, 30 seconds. I'm looking right here, financialjuice.com, FOMC rate statement, 1 minute, 22 seconds. One minute warning. 1 minute warning. Oh, yeah, somebody's selling there, 220. You got somebody at one of these institutions that is selling. You got somebody at this institution that's selling right at the VWAP. I don't know why you do something like that. That's like your first position. I mean, probably has about 5,000 contracts they can work with, so they got the cheddar. I don't. They got the cheddar. They got the cheddar cheese to make the trades. That's a scale in for them. 220 contracts. That's a scale in for old Black Rocker. Holy smokes! Look at that mother. Oh, that dude took some friggin' heat. Man, I feel sorry for your ass. Risk desk could be calling you, be like, "Yo, man, are you smoking dope at your desk again? What you doing, man? Look at this, man. Thing going crazy." Blah. U.S. interest rate decision, actual 3 3 3/4 forecast, 3 3/4 previous 3 3/4. Like I said, ain't nothing changed, folks. Like I said, ain't nothing changed. Look at this. Interest rate decision, actual 3.75 forecast, 3.75 previous, 3.75 Fed. Inflation remains elevated relative to 2% goal in part reflecting supply shocks in certain sectors, including energy. Blah. Wait till the dust settles, folks. Wait till the dust settles. We ain't got no change on the interest rate. Wait till the dust settles. Wait till the dust settles. Oh, man. That dude took some heat, bro. Took about a 150-point heat on 220 contracts selling. Daggone, man. Like 220. Daggone, man. 220 contracts at 20-point move is 4,000 times 150 is about 660,000. Holy smokes. Boy, your ass is in trouble. Fed vote in favor of policy was 9-3 with Fed's Hammock, Kashira, Logan descending in favor of a 25 basis points increase. Yeah, buddy. Ooh, this might be interesting. I can't do that. I was getting ready to buy. I can't do that. I can't do that, man. No, sir. No, sirree. I can't do that. No, sirree. No, sirree. I cannot do that. Remember 2:30, 2:30, the meeting at 2:30. Remember the 2:30 meeting. Okay, folks, remember the 2:30 meeting. I'm looking for a pullback, folks. Can you give me a pullback? Can you give me a pullback, man? Thank you. We're getting there. No, we're not. Come on, man. Give me something, bro. Got all these stinking buyers up in there. Look at them freaking buyers, man. Give me something, bro. Give me a pullback. Give me a pullback. You see this thinly traded volume right there? Right there? I'm gonna pull back down to here, man. I ain't gonna get it though. I know I'm not. Remember 2:30 meeting. Remember the 2:30 you got FOMC press conference with Chairman Warsh. Chairman Warsh at 2:30. The market moves during the meeting too. Okay, it will move during the meeting. It will move during the meeting, so be careful. I'm not really seeing anything. I see some absorption on that sell imbalance. That's what I see, but that don't mean anything.
Order filled. Order submitted. Order canceled.
Let's see if we can't get a flush. Oh, don't like that.
Order filled.
Thank you. $230. I don't like that. Um, so we got the bad old consolidation. We had double stacked sell imbalance right there. Moving averages are sloping downwards. And I'm thinking we're rolling over. I'm thinking we've diverged quite far. So FOMC meeting, you got to be careful, man. So we get in here, we get a nice flush. I should have just cut it right there, but then I just got it out right up in here and got about $230, man. Ain't much. Okay, you get yourself about 21 points, man. Okay, $230 on a mini. Let's see, solves. What is it? 230 divided by 20, about 11 points. Okay, so I got about 11 points. Ain't no big deal. We'll just move on. Ain't no big deal. Just move on. I was hoping we get a flusher. I was hoping we get a flush and lose all this volume right here and get yourself a nice 50 pointer. But I guess not. We'll just move on then. I mean, but you saw how I got green pretty quickly. Uh, man, if you got in on that, I mean, if you got in on that, that's a good job. You better be putting the stop right here. If you got in on that, you got selling balances way down here, and we closed right up here, but we're taking out that right there. Okay. So if you got in on that and you got out right here, that's about 25 points. It's about $500 trade for you. Okay. I mean, yes, it's valid because we got the 1 minute moving upwards. Boom. We got the moving average is starting to diverge a little bit. You got the volume that's green that's picking up. So yeah, that's a good trade. I just didn't like it because I wanted the imbalance right up here. It's not way to hell down here. I want it right there. Okay. I don't want to be risking a 22 pointer. Okay. I just don't want to do that. That's not my forte of taking that kind of hit, like a $400 hit. I just don't want to do that. Not when I just made 230. I want to have a tight stop. Some people say I'm picky, which I am. I mean, I want a tight stop. Yeah, we could bounce around this area until 2:30, to be quite honest. You know, power hour could be interesting. Depends on how far we move during Fed swaps no longer. Fed rate statement, Fed vote in favor of blah, blah, blah. We already read that. Fed swaps no longer fully priced in a September rate hike. Huh? Really? Really? Fed? Really? That's interesting. Fed swap Fed swaps no longer fully priced in a September rate hike. That's very interesting, folks. Oh, you got a little trapped seller right there, maybe? I mean, 47 sell contracts is no little small change, especially when you got all those buyers right there, okay? Now, of course, some of them buyers might have been taking some profits. Who knows? But 47 single order contracts is nothing to sneeze about. And here's the thing, some people don't understand this, but the futures market is a zero sum game. When you buy a contract, someone's selling you that contract. So if you make money, that other person's losing money. Okay. It's a zero sum game. It's not like stocks where you have a pool of shares and, you know, it's not like that. Futures market is different. You don't have a pool of contracts to just buy and sell. Okay. Not like stocks. The futures is a zero sum game. It's win or lose. Okay. It's just the way it is. Someone, if you want to buy a contract, somebody's selling that to you. It's a zero sum game. Man, we might have to wait. I mean, $230 ain't that bad. I mean, you got this right here. You got this right here. You got that. See, the reason I traded account 32, I don't know, it was like a week or two ago. I took like it got hit by $1,000. So I'm like, yeah. I can't remember what I was doing. I was doing something. Can't remember. I don't know. But it got hit like $1,000. So and that's why I wanted to trade it today to see if I can get it back up to good standing. Uh, so we'll see what we can do. I mean, $800 day is not that bad. So that's why I wanted to trade this account because this account, I mean, we just took that short and I just made a quick 230. Okay, I'm trying to get this account back up, which is fine. I want to have at least a few more funded. I want to have a few more funded. Pretty soon, you're going to see some fireworks here pretty soon. And probably in a couple of weeks, you're going to see some fireworks of me trading pretty large. If we can get this Iran war straightened out, you're going to see me slinging 3 to 5 minis around, scaling in and out. Okay. I can't trade, man. Just do not trade. Just get your stinking hands off the keyboard. Okay. Just wait. You got like 15 minutes. Just wait until starts talking. Fed swaps no longer. Yeah, we already read that. Fed rate statement, inflation, 2% goal. Yes, we already know about that. Yeah, like if you guys don't know, what you need to do is come over here to financialjuice.com. Come over here to financialjuice.com. you'll get your news and stuff. Okay, you'll get your news. Like 2:30 FOMC press statement conference with Chairman Warsh. So, uh, yeah, Trump speaks on transportation at 3 o'clock. Oh, during power hour? Oh man. Well, it ain't gonna matter. The commander in chief is usually late anyway, so that don't matter. The dude is usually late. Ooh, what we got here? Ooh, yeah. Man, this is really hard to trade. You got all those buyers right there taking a little bit of heat, not much. They ain't taking much heat. I think it, what would make them capitulate is if we broke that low right there with all this volume area right here. Remember what I said about low volume areas? Okay. Remember what I said about low volume areas. Let's take a look and see what happens right here in this little box. Doesn't have to be perfect, but we'll just see what happens. Okay. Do I have a box? I don't even know if I have a box. No, I don't. Oh, you mother effer. Well, you know what I'm talking about. We're right here. Okay. All right. Let's see what happens in this little box right here. Okay. Uh, you understand what I'm talking about? Oh, I missed it. Mother effer. That wasn't much. It was like 5 points. 5 points is 5 points, though. You got 15 minutes. You got to be aware of this. That ain't a micro pullback because look at the volume down there. You see that? The volume right there. The volume right on these right here. These two definitely ain't no micro pullback. It's hard to trade FOMC because it's just erratic. It's just erratic. That's all. Look at this 1 minute too. This is something you need to be aware of. You have a wick down at the bottom here, and then you got a wick up top in the past. Within those 2 minutes, you had a wick at the bottom and the top. Okay, then you got a wick right here. So you just got to be aware of the price action of this 1 minute. Okay, you really need to be. Uh, it's like 217. They're building up the sell volume right here. They could run it down. It'll be interesting to see if we can get this flush. I'm not taking that sell because I don't like how it did not flush it. Like right here, you had up, down, up, down, up, down. I don't like how it's just sitting there. I like to see it happen at least on this bar, and like the second or third bar. It really needs to happen.
Order filled. Order filled.
Yeah.
Order filled. Order filled. Order filled.
Yeah, this account could get hit pretty hard. I mean, I got 3 of them I'm working on, so it really don't matter. Come on, man. Nope.
Order filled.
I don't like that. So we are coming back down. I didn't want to take that sell because we're above that moving averages. We got 10 minutes till Warsh starts speaking. And I'm trading an account where it doesn't really matter. I've got like 3 accounts that I'm working on that I will not trade on FOM. See, well, the 2 accounts I did trade. I made like $600 this morning. Account 32 is just like an account that kind of I'm trying to get back up above 50K. So
Order filled.
do not follow me because I'm trading an account that I just don't really care about. So do not follow me, folks. I'm okay blowing this account. So do not follow me during FOMC meeting. We got 8 minutes before the meeting. So the rate statement already came out. We got like 8 minutes. Here, let me see what's going on. Like, don't follow me on this trade, okay? Yeah, we got FOMC meeting, so
Order submitted. Order canceled. Order filled.
oh, come on. Yeah, just don't follow me on these because unless you don't care about an account, I'm trading an account where I really just don't really matter. Okay, I'm trading an account that where it really doesn't matter. I'm not going to be trading 28, 27, 30. The three accounts that I'm looking to try to push over to funded. And actually, I need to enable a funded account so I can have more to trade on. Maybe I'll send out an email tonight and get that done.
Order filled. Order submitted.
We get a pop, we get a pop. If we don't, I don't care.
Order canceled. Order canceled.
Whoops.
Order filled.
Man. Come on. The movement average is sloping downwards. I'm counter trend trading. Okay, but I'm looking at this and seeing, okay, you see how we traded in this thinly traded volume area, how we actually came down here. Okay, again, that's what you do. I'm looking at this 370 right here. This is what I'm looking at, this 370 right here. And I'm trying to get if we start trading, whoops, get back here. If we start trading above this area, then yeah, we could possibly move back up. But then again, you got like 5 minutes until the meeting starts. So, and in these meetings, be careful, folks. In these meetings, be careful. Okay? Don't be trading an account you really care about. I'm just warning you. Fed swaps no longer fully pricing. Yeah. Fed Chairman Kevin Warsh speaks after interest rate decision. Yes. Okay. I'm going to have it's right up here. Okay. Financial Juice right here. You can go to Financial Juice and just click on play and you'll be able to hear the dude speak. He's kind of a young chairman, I think. Chairman, to be honest. Yeah, so if we hold this 370, yeah, I'm looking to go long. But we also got about 4 minutes, so who knows? Who knows? You see, a lot of this, during news like this, a lot of it is not, how can I put this? A lot of it is not statistical averages. It's not putting the odds in your favor by statistical averages that you backtest. Unless you've got a trading plan that does it, or FOMC meetings and talks afterwards. Yeah, okay, I will agree. I don't have a trading plan to do it. So what I'm trading off right now, just pure price action, discretionary trading. That's all it is. Do I have an edge? No. It's new. That's why I'm trading an account where, like, if it blows up, okay, no big deal. Would I be trading a personal account today? No, absolutely not. Absolutely not. Absolutely not. I would not be trading no funded or personal account today. Absolutely not. Oh, we got about 2 minutes. See all this price action. The only thing that you can really look at on this pullback right here on the past 15 minutes, you got 84 negative delta positive, 136 positive, 334. Okay, and 370 buy contracts right there. Aggregated buy contracts within 100 milliseconds. That's actually good, kind of forming out right here. You see how this low volume area right here, we're kind of trading through it. And now we're kind of building out volume. That's pretty good. If we lose that 372 and go below the VWAP, yeah, it could get ugly. I'm actually thinking, you know, you probably got some support down there. You had that 220 aggregated sell and we closed above it. Of course, they got boom. But that was burned. Like 220 sell right before the FOMC. Yeah, it just
Order filled. Order submitted.
Are we going to get a pop?
Order canceled. Order canceled. Order canceled. Order canceled. Order filled.
I got order filled. I mean, I'm green. That's all that matters. And the reason I took that is because we have this area right here. We're moving up. We're flatlining on the moving average. So you got a little buy and bounce right there. We're probably breaking that area. We had this volume right here. Nice big fat volume bar right there. So you just get in there and you just start drilling it up, man. And you just get yourself, I don't know, 20 points. You know, that's just the way the game is played. Just get lucky.
Good day.
You get lucky, then the dude
My
comes
second
out.
FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however,
I'd be
does not mean
leery
a lack
about
of
taking
clarity.
trades right now.
For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%.
Bouncing
Let
off
me
the
reiterate,
VWAP.
there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. Two economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business
investment.
investment.
1 minute, you got a wick right here, it ran
The
up,
surge
wick
in
right here,
high-tech
the wick
capex
right
has been
here.
remarkable.
It's holding, and it's above the
But
New
that
York
does not
VWAP.
necessarily make
So,
the Fed's role any easier.
Is this something you got to be aware of?
In the AI-related
pushing it
category of
up.
high-tech
Here we
equipment
go.
and software,
We're going to come
the
back
most
down
recent
to the
data
VWAP
shows
and
four-quarter
bounce off
growth
of it.
rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict.
See that wick right there? They just pushed it right back up.
FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed?
The previous
Second,
5 minutes, like a spinning top, has
My
wick at
colleagues
the
and
top
I
and the
considered the
bottom,
economic
small
shocks of recent
body
years.
candle.
Strained
That-
supply
that's
chains
indecision.
arising
They
from the
don't know
pandemic,
whether they want to go up or down.
military conflicts,
So just leave it alone.
energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices.
I'm not
If,
trading
as the
while
Fed
he's
has long
talking,
held,
because
interest rate
it-
policy
there's
should be its
nothing.
primary monetary policy instrument.
If you want to take these
How
trades,
much
you
accommodation
can.
are we getting from the
It's just
balance
I'm being
sheet?
a little leery about it.
In all of this, our work is advancing at the Fed.
Like
We're
that's an
asking
inside
the
bar.
right questions. And in this consequential time, we know how very much depends on getting the right answers.
Oh, you had a run up
course,
right
you've
here.
all
You had that
arrived with
little
questions
inside
of
bar
your
right
own,
there, and the
so
volume
let's turn to
dried
them
up. Yeah, you could have gotten a little spike, maybe about 10 points off of that. That's fine.
Thank you for taking our questions, Mr.
Same thing
Chairman.
with this one. You know, that's fine.
You've had a couple
It's just hard to be
months now, or 9
trading
weeks, or whatever number it
when
is,
this is going on.
to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah,
The
so I
markets
think
are
officially it's
manipulated.
8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market
You got
signal.
230
That's
aggregated
part of the
sellers
reason
right
why
here.
we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, you know, many of you might be interested in our reaction function. We're interested in the
Some
reaction
order
of
buy
financial
contracts
markets.
stacked and balanced, but
I get that.
I don't know.
Mr.
It's
Chairman,
hard to
and
trade right.
I guess
now.
the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers like market pros can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterise the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction
I'd be
between
careful about
among my
shorting. Look at
colleagues.
all these buyers right
It was
here,
a
man.
real family fight.
Look at all these buyers, 260.
My view, which you've long
that
heard,
seller right there,
is
266
that's the
seller,
better
this
way to
seller
get
right here.
policy right. That's our
trapped.
North Star.
I mean,
So
this is. I'd
there
be
was
careful.
a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much, not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64.
You got the overnight
final
highs of
calculation
28,178.
So we'll be watching inflation data over the period ahead. But I also don't want you to leave the misimpression that we're
but we
sort of
are getting up
breathlessly
to the
waiting.
highs up here.
I've called for a task
session
force
highs
to
right here.
revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. It suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate.
You need to understand that
markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say.
Do you see any sell
what we
activity
do.
up here?
Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days
now you got some
showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities?
Now let's see if the sellers get
what's
trapped.
The effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
You got to have confirmation of sellers. You're not getting confirmation. You're getting trapped sellers.
Thank you. Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools.
Man.
If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. but I wouldn't say
It
it's
looks
in
like
isolation.
those sellers could be
I
getting
tried to
trapped.
describe in my remarks today
Because you have
point
sellers
that I
up there,
made
you
in-
need
to the oversight committees a couple of
confirmation.
weeks ago. I think there was a
We ain't got it
misimpression
yet.
by some in
We
financial
could get it.
markets, by some households and businesses,
In about 2 minutes, it
central
could be a
bankers
big-
like me,
big
we set a
long tail
2%
and we close
inflation
down here,
target.
you know?
but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher.
I mean, I gotta be careful because I'm
What
up-
I heard in the
made-
last 2
made like
days, what I've heard in 8.5
$700,
weeks
so
is no.
I'm trying to
We
get that
will
one account
deliver
back
the
up
2%
to over
inflation
50K.
target. That is the committee's definition of price stability.
Yo, what's up?
So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered
some
around the
water
right
here.
number.
Yeah, just because you get sellers, you
And I
gotta
think
have
we made some
confirmation.
progress
I mean,
on that.
we're getting
I'm
a
not
wick.
suggesting
I want to see
we're
a
done
close
on
below
that.
them.
It's worth
That's what I want to
reiterating.
see.
And ultimately, the business we're in, Colby, is performance.
I'm not looking to
We are
pick
going to
the
be
top.
judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally
I mean,
consequential part.
we're breaking new
How are
highs
you
again.
factoring the fact
This
that a
is-
large portion of
the market doesn't
inflation
give a
overshoot
crap
is
if you
being
think the
caused
mar-
by
it's
supply
gone
shocks,
too high.
as
It
it's
does not
mentioned
care
again
about
in
your
the
opinion
statement?
or mine.
Does that
Does
blunt
not
the
care.
effectiveness of rate hikes in your view?
It does not care.
First, on the
What
premise of your question, it was almost as
Whatsoever.
if you were listening to our discussion in the last day
market
and a
does
half.
not care.
A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effect, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is
wow.
broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher.
See what I mean?
That's
The
among
market
the
don't give
chief
a
questions
crap.
we've asked ourselves. And around the room, people have different views
Market
on
don't
it.
give a
I tend
crap,
to think in the
man.
coming months we're going to
You
refine
got
that view and
some-
have
all
a
right,
better
all right,
judgment.
Let's see what you
And
got
we're gonna
there,
market
boys.
prices
It's
trying to help
250.
inform it
We got a
too.
new 5-minute candle. You closed above it. You got trapped sellers right here. You know, you got
Thank
some
you,
prop
Mr. Chairman.
farmers
Edward
trying to
Lawrence
short
from
this
Fox
thing.
Business. I guess I want to drill down maybe a little
I
bit. What
mean-
specifically, in your mind, would be the argument then for a pause?
Did they
today?
try to short here and get,
So I wouldn't
taken out? They tried to
characterize what
short
we did
here.
as
Are they
anything
trying to
like a
short
pause.
here?
I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions. And I'd characterize
Order
it as
filled.
a view of
Order
what our own
submitted.
homework is
Order
to try to
filled.
resolve those
Yeah.
questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market
Order
prices would
filled.
take the other side of that. Financial market prices in this intermeeting period, they didn't pause. They reacted to
Come on,
the
man.
inflation data in one direction,
Stop with the
strong
jitteriness
economic
there.
growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman
come
uses
on.
the
What-
Jackson Hole Summit as a sort of
Hello?
a reset of monetary policy. Well, how do you look at the speech that you're going
Hello?
to make in August?
Yeah,
I
that's
look
what I
at
said.
it like a blank piece of paper right now.
I'm not.
I have
I'm not.
not
Oh,
begun
come on, man.
consideration with the
I'm not Ethan. Take me off the
incredible
list.
team here, what would go into that document. I think you've characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods,
Right.
it would be sort of a setting up speech more often than not of
Yeah,
what
don't
was going
follow
to be happening
me.
in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big
No,
questions.
I'm a trap seller.
There is a tendency, especially with the proliferation
You
of
gotta
meetings
love
and press
FOMC,
conferences,
man.
to get caught up
You
in
gotta
the
love
myopic.
FOMC
Did you do
meetings.
this by a quarter or
You
do
gotta
that?
love them, bro.
Ultimately, whether we deliver on price stability matters some. The decisions
You
we
gotta
make
love
in 6 or 7
FOMC.
or
This
8
is
week
what happens during
periods, they matter
FOMC.
more.
This is
What are
what
the big
happens during
questions? What's
FOMC.
really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between
Ninja
September
Trader,
and
it's just
December.
freaking
I will tell you one
horrible,
other thing that I am doing between now and Jackson
know
Hole.
why Ninja
I'm
Trader,
checking with those
for
task
me,
forces.
it's parallels.
My first
Ninja Trader
principle
and
of
parallels
establishing a
is so
task force
stinking horrible,
is
man.
find the best subject matter experts anywhere in the world and put them together.
Ninja Trader and
especially put them
parallels is
together
so
with other
stinking
people who might
horrible. It's
disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything.
I mean, I will
say in
support it
Jackson.
with the add-on, but I'm trading on a Mac, so I got to use parallels.
Nick Timmermans of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates
I
bring
got to
inflation
trade
down by
on a
cooling
Mac,
demand.
to be quite
It's
honest.
generally
Oh,
thought
come
that
on,
can
man.
show up in the labor market. If that's not the channel you're relying on, what is?
Yeah. So let me go back to first principles, Nick.
I mean, the jitterness
I
on
don't
this thing is just
believe that
unbelievable.
either part of our mandate is generally at war with the other part. I do not believe that
Come on,
price
I'm
stability
trying.
and full
Okay, I
employment
blew
is an
that
either
account.
or
I don't
proposition.
care. I'm just trying to get rid of freaking
There have been
jitterness there, you damn
policymakers,
Ninja Trader.
over the last several generations who have thought
And
that
then I
there is
can't-
a strict trade-off there.
God,
That
I
isn't
hate
my
this thing.
judgment. In fact, my judgment is
Oh my
if
God, I
and
hate
when
these
we deliver on our remit, we're going to be satisfying both prongs.
Whatever.
We're going to have price
All right,
stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable, such that
Well, that accounts
employers,
for one.
businesses, wouldn't really know what's going on. So I think the two parts of our
I mean, it was
mandate
fine. It
are
was already
equally
$1,000
important. We have
down.
no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them
I don't
as
know.
elevated.
Does the
and that's
add-on
what's
run
taken
smooth?
most of our
If
discussion.
you have a Windows
in
native
terms of transmission
computer,
mechanisms of
and not running
monetary
parallels,
policy,
does it
I think
run
different
smooth? I don't
tools
know.
work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order.
is
But
this
really
guy
what we're
talking about?
doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in and around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, I got to deal with
So
the
I'm gonna
jitterness.
I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us, they weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect,
The
their
reason
own
I put
judgment.
that count is because, well, you have trapped sellers here.
Surprises
above
are
it.
not the objective.
So
but at the same
I
time,
tried to go
I
short
would say
down in
we
here.
didn't come
I didn't
into
get
this meeting
confirmation.
feeling
That's why the account was
constrained
blown. I didn't get
by the full range of
confirmation.
alternatives we had in front of us.
We were moving
So
down
some
below.
of your peers have continued to discuss
I mean,
how they
we
think
got
about
a tail
policy
right here.
decisions.
And I tried to
and
short
if
right
you
here,
don't
thinking we would move
offer
down.
your
1
reaction
minute was
function or
not
your way
lining
of
up.
thinking
That's why I
about
say
it,
don't follow
how
me.
concerned are you that you're
I was
ceding
willing to
control
blow
of the
in
narrative?
the evaluation.
So we're
account.
not very
I'm
concerned.
willing to do that. Well,
That's
because
a short answer to the question.
I don't know.
When
Where are
some
we? Have
people
Ninja
that
Trader
follow
rule.
the Fed say,
You know, I don't care
well,
about
we don't
blowing
want your
in the
forecast.
evaluation
We
account
don't want
because
your
I've
dot- we
got
just want
like
your
3 of
reaction
them
function.
right here that
Part of me here is what we really want is
like
your
when
forecast.
I'm not trading
What we
stinking
really
news.
want is your dot. In terms of reaction function, let me sort
these
of
3 accounts could be
disabuse,
funded. I'm at
people
least
of a
going to get
question
one
that
of them
may or may
funded. I
not
know
be
that.
real and be out there.
I mean, that's
Any central banker,
I'd really have to really
especially a central banker where
blow stuff up to be
the
able
labor
to do
markets
that, so.
are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's
You
more
got to
inclined
close
to
above the
loosen policy.
1 minute moving
That's
average.
my
but it's
reaction
kinda like
function.
Flatline, we're trading
and,
below
I
it.
don't suspect it will.
I mean, this thing could shoot up.
Cause people to not
Don't be trying to
continue
short
cry
it just
for
because you
more.
think it's ran too
Because
high.
the truth is, for a very long time, in a lot of countries, coming out of the
I thought I would
2008
be
crisis,
sneaky about
we're
it
in
and get in
crisis
early.
mode. We were purposefully
when we were coming back to those
providing
sellers.
a lot
and
of
I'm like,
information,
I got
trying to
trapped.
provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance
Order
with
filled.
clarity as if we're tying our own hands
Order
behind our
submitted.
back. Well, in crisis mode, that strikes me
Order
as a very
canceled.
prudent policy. But in more benign conditions, it strikes
canceled.
me as worth revisiting.
Oh my God! Enough
But
with the
markets and
jitterness.
market
Oh my God, that's going to
participants
drive
and
me
reporters
nuts.
have learned to
That's gonna drive me
devour all
nuts.
that information. So
Order
I
canceled.
take seriously that the pullback of forward
I gotta
guidance
fix that,
requires
folks. This
some
is killing
transition.
me.
Order
Reform
canceled.
isn't easy.
Oh my
But
God,
our
I'm
general
gonna puke.
judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Don't do it. Don't do it. You
Order
turd.
filled.
You mother effer.
Thank you. When you talk about
there we
the
go.
2% inflation target, what measure
I don't.
are you relying on?
I gotta
So
fix it. How
I'll
can
give
I
two
fix
answers.
it? It's-
First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that
So-
strategy document, which I believe was
I don't
dated
know.
January
I
of this year,
The And dude just needs to be quiet. Come here. Come here. Come on. Where's the mute button? Where's the stinking mute button? All right. That dude needs to go away. All right. Let me explain this trade. Okay. So I did try to short. Okay. I tried to short because I thought I'd be sneaky and get in earlier, and I got trapped myself. Okay. Yeah. Big deal. I mean, I traded an account that I didn't really care about. But these three I do care about. So we had a buy and bounce right here. Okay. We were moving up on the 1 minute. Okay. If you look at this, I really wish I had I need to build some really good drawing tools instead of these. We have a buy and bounce right here. Okay. And now look at the volume right there. You see that volume right there on this buy and balance? You got a stacked buy and balance. Look at the volume. So a break of that is telling me, break of that previous high right there is telling me to go ahead and get in and then just kind of trail it for about 20 points. Okay. That's what that's telling me. Okay. Where would I put my stop? If I'm in right here because the break of that high, am I going to put my daggone stop way the heck down here? Why would I? Why would you do that? Let's take a look at a footprint chart. Okay, let's take a look at a footprint chart. Sometimes, most of the time I'm trading a footprint chart. Okay. Let's take a look at this for some reason. Okay. If you have a buy and bounce right here, you've got 1, 2, 3, 4. Okay. That's pretty good. So you get in here. Why not put your stop like maybe down here after that 32? Maybe a point or two below the stacked imbalance. Why put it way the heck down here when this is thinly traded right up in here? And the odds of you going from here to here is pretty decent. Okay. The odds of breaking that and going down is pretty decent. Okay. I I'd probably wait for the break of the pullbacks. Look at the pullbacks. You have a move down, but these pullbacks, the volume, yeah, you got 3 bars pulling back. You got the 4th bar. No, 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 no. I possibly wouldn't do that. Also, you got to look at the 5 minute right here. You got buyers up in this area right here. I'd be kind of leery about that. That's why I took this account long. I'm like, you know what? I tried to short. It didn't work out. I got a nice little decent long, and I'm like, okay, done. $350 in one trade. Okay, I'm good. Okay, it would have been nice if it was 400, but you know what? 350 trade. That's not that bad. So I just be careful about going long because you got all of those buyers right there. I already got trapped once selling. I ain't gonna do it again. Yeah, this is. There we go. Yeah. No, I don't want messages. So I blew one account, ain't no big deal. So what did we end up with today on these 3 accounts? It's like power hour. Power hour is kind of hard to play for me. 365 plus 265 plus 351, $980 day. Okay, so that's pretty decent. You got sell and bounce with the inside bar right there, but man, $980 day. $980 day. Switch over to micros and try to get over 1,000. Let's see if we can't get it to 1,000. I only need $20. Where are we at? Oh, come on. No. Come on, man. Man, I really kind of like my platform better. The problem, Ninja, the problem I have is I'm running parallels, folks. I am running parallels, and that's not all that good. Let's see if I can't make $20 and get over 1,000. Ready. I don't like that. I just cut it. Oh, 208 aggregated buyer. What is that going to happen? I'm stepping aside to see what happens on that one. Um, Are you going to give me a pullback? What are you going to do? You're not going to give it to me, are you? Come on, come on, come on, come on. Oh, that's a little too much volume. I didn't like that. That was a little too much volume. Same thing with that bar. Are you kidding me? I'm $2 away from 1,000. You got to be. Only me, dude. Only me does that crap happen to. You got 208 buyer, 214 buyer. So I'd be careful about trying to short. You got the 1 minute sloping downward, so but the 5 minute is setting up the 1 minute, 5 minutes contradicting each other. It's really difficult. Contradicting each other. You got some consolidation happening on this 5 second chart. It's very difficult to do stuff. Oh, come on. Now I'm far away from it. Oh, well, I don't care. I mean, I was like $2 away from 1,000. $2 away from $1,000 day. $2. That's it. 315. You gotta be careful. If you made profits, don't give it back. If you made profits, do not give it back. Man. Man, we are in big consolidation, folks. Be careful. We're in big consolidation. Big fat consolidation. Be extremely careful. Big fat consolidation. We're in big fat consolidation. Big fat consolidation, folks. Be aware of what you're doing. Okay. Um, be aware of what you're doing, folks. You are in big fat consolidation. Okay. So you got some wicks. So, I mean, I've made $940 today. Okay. I'm trying to get over 1,000. I don't know if I'll make it. Who knows? Who knows, folks? Wow, look at that big old fat consolidation. So this is where I'm at. Okay. This is where I'm at. 51,000, 51,000, 50,900, 50,700. I mean, this is where I'm at. Okay. Maybe we switch over to account 27. Try to get that one up. Or account 30. Maybe we can try to get that one up to, oh, where am I? Account 30? Yeah, account 30. I'll see if we can get that one up to 51,000. Is it 320? Yo, is Trump running his mouth? I thought he was supposed to be talking. I guess not. 1,500. No, Trump ain't talking. I don't know what's going on, man. News don't know what the hell's going on either. Nobody knows what's going on. They all nuts. Nobody knows what the heck is going on. We're coming down to the VWAP. Be careful. Coming down to the VWAP. You got a lot of buyers. You got some buyers that got trapped on the previous 5 minute. You got some buyers right there at the VWAPper. Yep, buyers at the VWAPper. Buyers at the VWAPper. Beware. Buyers at the VWAPper. We're going crazy. Going brother. VWAPper. Got some buyers at the VWAPper. You got some buyers at the VWAPper. Look at that. Ooh, got 29. You got 29. You got buyers at the VWAP. Buyers at the VWAP, folks. Buyers at the VWAP. Beware. Beware. They are large and in charge buyers at the VWAP. Ooh. I guess you ain't large and in charge there, buyers. You get your ass handed to you just now, didn't you? Yes, you just did. Is it going to be a faker? We don't know yet. Yeah. Come on, man. Don't be consolidating at 323, you little turds. Yo, man, what the hell is up with this action? This is the kind of crap you get, folks. FOMC, this is the kind of crap you get. Like, come on, man. Seriously. Oh, come on, man. That ain't much of a trade, but I'll take it. I mean, you're right here at the VWAP. You got a lot of volume up in here. You're consolidating on this 5-second chart. The best thing to do, you got inside bar on the 1 minute right there. You know, we haven't traded below that inside bar. We traded a little bit above it. I mean, it's all jacked up. Man. Everything's jacked up. Okay. I'd be looking to sell more than anything, to be quite honest, until it proves me wrong. So, I mean, FOMC after the meetings, you know, it's power hour. It's just not ideal to be trading. That's why I'm trading micros, because I'm just pissing around. Man, look at this. This is horrible action, man. With the consolidation. Give me something, bro. Wait a minute, you just did. Oh, man. Be careful. Be careful. The buyers are coming in. Okay. I tried to short right here. And I got it, man. I got a short. I got an inside bar right there. So I broke that right there. As soon as I saw that little 33, I just cut the stinking trade, man. I got out. I ain't screwing around. I ain't screwing with them, man. 296 right there. I ain't screwing with you. I see large numbers, and I'm like, oh, no. I'm just pissing around towards the end. Uh, uh. Ooh, don't like that. Ooh, don't like how it got taken out. Boy, they came back with a vengeance, didn't they? Get that 296 aggregated buyer right there. Get that 296 aggregated buyer right there. Man. Can we get something here? Yeah, nothing. No, we get a bunch of BS consolidation. That's all we get. Bunch of BS consolidation. How much am I up today so far? 936. Bunch of BS consolidation. That's what we get. A bunch of turd crap. Little turd poop. Little turd poop. Little turdy. Little BS consolidation. Oh, come on. We had a buy and you can't hold it. What's wrong with you idiots? I mean, I'm up $900. I mean, it would be nice to get over 1,000. I mean, it really would. Come on, it's 3:30. Stop with this. Enough with this shit, man. Oh my God. Come on. Oh, man. Come on. The action is horrible, bro. I know some people say, "Are you trading a 5-second chart? Are you a nutbag?" Yes, I am. Yes, I am a nutbag. I'm a $900 nutbag for the day. People are like, "Are you a nutbag trading a 5-second chart?" Yes, I am a nutbag. Bro, you cannot tell me you get them buyers down there. You come up here, you can't. Come on. If you didn't notice, my bias is long right now. If you didn't notice. Come on, bro. Just a nice $60 trade. Oh, come on, 332. Just a nice $60 trade. That's all I'm asking for. To get me over this account to be 51,000. That's all I'm asking for. I'm not asking for much there, NQ. I'm not asking for much. All I'm asking for is to stop with the little, you know, the little up down up down. Man, this consolidation is horrendous. Okay. Boy, that was difficult. So I got 2 accounts over 51,000. Jeez, that was rough, man. It didn't make it easy for me. Them mother lovers didn't make it easy for me, man. Are you kidding me? I mean, that was rough, bro. That was rough. And look at this. 991. I'm $9 away from 1,000. I mean, after commissions, I'm below, but I don't care. I mean, come on, man. Give me $1,000 a day. Everybody wants $1,000 a day. Everybody wants $1,000 a day. I know, man. I know. All y'all want them $1,000 days, man. When they come, they come. Okay. When they come, they come. Don't be looking for them like me. Do as I say, not as I do. You'll be fine. Actually, if you do what I did, you actually be fine too. Okay, that's kind of like, yeah. All right, never mind. Bro, that was rough, man. That was rough. Okay, where are we at? Count 27, count 30, 30. Come on, where are you at? Count 27. Give me count 27. Give me $9. Give me $9. 336. Come on, we got 14 minutes. Give me $9. Give me $9. Give me $9. Oh, come on. I need 9 smackaroos. I need 9 schmackers. Give me 9 schmackers. I got 2 accounts over 51,000. Oh, hold on, folks. Hold on. Oh my God. I'm not set up. Oh my God. Ninja Trader, you're going to screw me, ain't you? Oh, that was a bad trade anyways. Come on, man. Give me 9 buckers. I need 9 buckers. $9, folks. $9. Come on. Can your boy get 9 smackers? I need over $1,000. I need $1,000 a day. Can we get 9 smackers? Look at the action on the 1 minute. That action on the 1 minute is kind of ugly, man. That's only a. That's. Oh my God! Give me. Oh no! Give me. Come on. Give me. No, that's too much volume. You fucker. You dirty dog piece of dog shit. You piece of dirty dog shit. I tried to play the pullback and it got me a stop out. I need more than $9 now. You mothers. You mother lovers, man. You come on. Hurry up. Booyah! All right. Your boy got the $1,000 today. Okay, all right. I'm happy now. I'm happy. Boy, they didn't make this easy, did they? They made me work for this today, man. You mother effers. You made me work, man. How dare you make me work? This is supposed to be like lackadaisical, sit back, have a beer or two, or some whatever. All right, now this ain't including commissions. I could care less, okay? But it's $1,000 a day. Look at that. 314 plus 326 plus 375. Okay, it's $1,000 day on FOMC day. I tried to. There was an account I tried to save and I blew it up. Oh well, who cares? But I daggone sure ain't trading these right here, man. Okay. So these two accounts, I got over 51,000. That's good. All I need is about 2,000 more, and boom, we got two more funded accounts. Okay, 51,800. Boom, we just do that, man. How about that? Okay, do as I say, not as I do. Okay, so what I'm telling you is, you see this cell right here? Get on in. You see that cell? Get on in. Okay, look at the 1 minute sloping down. Boom, trade with the trend. Look, and I'm being honest. You ain't buying the high. I mean, you ain't selling the highs and buying the lows. You ain't buying the lows and selling the highs. Okay, just enough with the stinking, I want home runs all the time. Okay, enough with that. Get your base hits. Do what I do and get your base hits, folks. Do what I do, get your base hits, and move along. It ain't that difficult. Actually, this was pretty difficult. I will admit, this was pretty difficult, folks. This was pretty difficult, man. And I'm not joking. Ooh, look at that. 35 been moving up, 35 moving up, 35 moving up. Ooh, going to take out them sellers, ain't you? Going to take out them sellers. No chase, no chase, no chase. Don't be chasing. Wait for a pullback. Wait for an inside bar and then a break of the inside bar with some volume. Okay, well, we got a little inside bar, a little break of that. Put your stop down to low, put your stop down to low. Boom, we get a move. We get a break. Oh, break even. Move to break even. Move to break in. Put the stop down at the low. Put the stop down at the low. Boom, you got out. Boom, better than taking the full stop out. Boom. That's the kind of crap you got to do. Okay, now this right here wasn't no stinking stacked and balanced. But another thing I'm trying to teach people is, okay, you get a run up here. Oh, you got a little inside bar right there. You get a break at that inside bar. You get a pop up here. You move to a break even. It's not running anymore. It's coming back down here. Just cut the trade, man. Just take a break even. Take one or two points. Who cares? Move on. Next trade. Boom. Move on. Next trade. That's how I got over 1,000. That's why I got these two accounts up here. I got these two accounts over 51,000 today. Okay. Base hits, folks. Base hits. You're not looking to make your home runs all the time. Okay. Take your base hits. Take your break evens like an adult. Okay. There's no need to full port and go or blow, stop that mentality. Okay, stop that mentality. Man, they didn't make it easy for me to get over 1,000 today. They did not make it easy for me. Some days are like that. Some days are like that. But like I say, grind accounts up, man. Okay? Just grind them up. Don't worry about passing counts all of a sudden, okay? You got some pretty big volume on that, so if you actually get in on something like that, you might want to move to a break even, okay? And I'm being very honest about that because look what just happened. You're 343, man, okay? You're 343. When you get a sell and bounce like this, I mean, it's kind of ugly right down in here, man. It's kind of ugly right down in here, okay? Okay, you really don't want to be trading in air. Gimme. You don't want to be trading in areas like this. You want to trade in areas like this. You do not want to trade in areas like this where there's a bunch of wicks and consolidation. You want to trade here. You want to trade up in here and look for. You're not looking to get the tops and the bottoms, okay? Leave that for the gurus later on tonight that after they've blown like 8 or 10 accounts and they show you one good one, then they try to sell you a $500 course, okay? Leave it to those gurus that try to sell you regurgitated BS that they learned from somebody else because they don't know what the hell they're talking about. And if you think I'm a nutcase for trading a 5-second chart, then look at the P&L. Yes, I'm a nutcase. And if you want to be a nutcase, you could join the nutbag team. All right, here, I'll be right back. Oh, my word. All right. All righty. Who wants to join the nutbag team? All righty. Yeah, they didn't make it easy for me. Holy smokes. They did not make it easy for me. I got over 1,000, man. Oh, man. Mm-mm-mm. Well, at least I got 2 accounts over 51,000 because like I got account I can't remember, it was 20 out of 30 I got first. Let's say account 30, it was over 51,000 and I wanted to get 28 over 51,000. So I just switched to micros and just did it. Who cares? And then I got 50,800. And why did I switch to micros to do it? Well, because it was late in the day. Most of the time during the day, I either, go nowhere or get back money. So that's why I trade micros in the late afternoon. So Friday, okay, Thursday, I'm not going to be streaming Thursday morning, but it doesn't mean that you can't take what you've learned today and actually use it tomorrow on your own. I would highly suggest that. I would highly suggest that, folks. I would highly suggest that you take a day when I'm not streaming and just try this. Okay? Try a 5-second chart in the morning. See if you like it. That's pretty. I don't know, man. 348. I can't. I wouldn't. I wouldn't be taking anything, man. 2 minutes. You got 2 minutes to the and that micro pullback. Okay, here's a good thing. Here's a good thing to look at. Look at that little pullback right there. Is that a good pullback? Well, if you're saying yes because it moved up here, the answer is no. Why? Because look at the pullback on the volume here. The volume's high compared to this run up, and plus it was only a 2 bars. Okay, I really like, and what I need to do is probably write an indicator for this. Where is my indicator? I didn't even trade my indicator today. Look at that. Okay, sell indicator. You got a buy indicator. And I didn't even trade my indicator today. Oh well. I did not even trade my indicator today. Oh well. It is what it is. I don't think it did all that good, to be honest. Who knows? Go 350. 350 I'll go. Smack y'all booty. 350 algo kicking in. Hope you got your adult diapers on. 350 algo. Hope you got your adult diapers on. Because if you got in here and you didn't start trailing them lows, woo, you got to smack down. That's why you do shift X for X-ray. You got to do a shift X, man. You got to get that in there. You got to get that in there. They better not have assigned me, you mother lovers, man. Accept it. I'm gonna go berserk on that company if they don't stop doing this. I know you guys don't know what I'm talking about, but it's like a side gig I do. They need to stop this because they're gonna tick me off. They got their little stupid AI assigning me stuff. The world's coming to an end of AI. Alrighty, folks. Okay. What'd she say? What is not? Because she don't know what she's saying. She's 5 years old. Um, Talking to the wife about our kid, our 5-year-old kid. Uh, let's see. Yeah, I mean $1,000 today. Not bad, folks. Not bad. The market made me work for it. The NQ made me work for it. Yeah. You know, here, I wonder what my stats are. Here, let me blank out the screen. I wanted to see what my stats are today. You really shouldn't be trading. We got a buy and balance. Really shouldn't be trading. It's 354. I just wouldn't trade, to be quite honest. I'm dead serious about this, folks. I mean, it's 354. I just wouldn't be trading. Let me close out Rhythmic Trader Pro again. Okay, we're done. We're done with you, Rhythmic. Yeah. I wonder what my stats are now. So on the 20th, for the past 2 days, what is my win rate? That can't be right. %50 win rate. Profit factor of 1.3, which is not bad. Max drawdown. Max drawdown is kind of. Oh, that max drawdown, it got skewed because I blew that account. It got skewed, folks. My max drawdown got skewed. What accounts are we doing? What accounts? 27, 28, 30? 27, 28, 30. Okay, so for these 3 accounts, so for these 3 accounts, 27, 28, and 30, it's like a drawdown of 145. Okay, that's fine. We've got 50% profitable, 56% win rate. We got max drawdown of 145. Okay. I mean, that's not bad. You got a profit factor of 4, so that's not bad. I mean, a profit factor of 4 between these 3 accounts is really good. Really, really good. That means for every $100 you lose, you're making 400. Okay. That's what profit factor means. Okay. That's what profit factor means. And a 56% win rate's good. Look at this, man. We went all the way up to the highs and all the way down to the lows. This is FOMC day, man. This is nuts. $357. 359. Yeah, it's just not. After, I mean, like 350, 345, you really just need to be done. Okay. You really need to be done. I wouldn't be pushing your luck. Okay. What do we have for the meetings tomorrow? We got 8:30. We got PCE at 8:30. 8:30 GDP. Q order. U.S. initial jobless claims at 8:30. So be careful around 8:30. PCE, PCI, initial jobless claims. Okay. After that, you really don't have much going on for the rest of the day. Okay. That's here on the site. Okay. Now Friday's going to be interesting because we got not much going on. You got 10 o'clock Trump cabinet meeting. I don't think it's live. I don't know what they're doing, so who knows? The market could move. We don't know. We'll just trade what we see. Okay. I mean, that's the only thing you can do. You can only trade what you can see, what's going on. All right. Hopefully we can get Friday. Hopefully we can do pretty good. We got hopefully, I mean, I I doubt, I very seriously doubt I'll be able to take one account and just pass it. Okay. It could happen. I could get into a trade and have one trade and make $2,000. Okay. It could happen. Am I going to look for it? Absolutely not, because it has to be 100-pointer. Okay. It could happen. What are the odds of it happening? Very low. Am I going to look for it? No. What am I looking for? 20 to 30 points. Okay. That's all I'm looking for. 20 to 30 points. I mean, today was good. I mean, 50 points for today so far. That's awesome. Okay. That's awesome. That's $1,000 day. Okay. That's good. I like that. What did I do Monday? Monday was like a $2,000 day. Actually, it was 1,900. It was like a $2,000 day. Today was $1,000. So, yesterday I looked at it and I'm like, man, I probably would have made like maybe $500. To be quite honest, I didn't think it was all that good. I could be wrong. I could have made more, but I probably would have made like, 20, 30 points. Okay. Yeah. Next week, more than likely next week, I will be passing these evals. Okay. At least one of them. At least one of them I'll be passing. Okay. We got account 27. We need to get like $175, and we'll go ahead and get that one up to above 51,000. Okay. When I get over 52,000, that's when I'm like, okay, I'm only taking A+ setups, man. I'm only taking setups that I really like to try and pass. Okay. So yeah. When I get over 52,000, I kind of like really focus and only trade like A+ setups on like 52K and above. So I had one blown account today. It was an eval. It was during FOMC. I just shorted it and held it, man. Who cares? It was already $1,000 down, so I'm like, yeah, whatever. Yeah, a bad mentality to have, but it's FOMC. Don't be trading it. I'm the one that got trapped as a seller. So, but these three accounts I traded seriously today. These three were traded seriously. Okay. And they're over 1,000. Okay, it's 4:04. I think I'm going to shut it down. I am going to this week I need to work on version 1.5. I really need to get it out. Because we got this indicator stuff right here. That's pretty nice that people are going to enjoy. I really need to get the the settings down. The line colors need to be saved. So I need to figure that out. I might have to just wait till the weekend to do that, to be quite honest. I might have to wait till the weekend to do that. I don't know. More than likely, over the weekend, it will be released, the version. So that's all I have. We'll talk to you Friday. Tomorrow I'm not going to be on. I'm going to be doing something. I'll talk to you Friday, 9:30. We'll see if we can do another $1,000 day then. Later.